What's up, everybody? Good morning. Happy Money Tuesday. We're going to dive right into it here in a moment. Just going to get a few things set up real quick, and we will be ready to jam. All right, so I'm going to send you this link, Tom, inside of Slack. Okay. And I'm pretty sure you click it, you authorize the certain things, and I think it just pops up on my end, and it's being streamed live. We will see. We're going to try something new today, ladies and gentlemen. Try something new today. So bear with me. We'll dive into it. We'll start the pre-market rundown. We'll talk about what we got going on for the day. And we will make it happen, guys. Ooh, I think it's working.
We just mute.
I think it's maybe working. Oh, look at that. And then I click this button that says show on stream. And look at that. We got Tom on the stream. That's what I'm talking about. I love it. All right, let me make one more little adjustment and we will be good to go. Let's do a quick mic check. Let's see if we can hear you, Tom. I cannot hear you. Let's see if that's on mine. Yeah, I do not hear you. Don't even hear the audio coming through. Let's try that again.
I hear you on that screen.
Okay, and I think I can hear you now too. So let's go ahead and mute the Zoom again. Okay, now go ahead. Quick little audio check. I got you. I can hear you loud and clear. They can hear you. I can hear you. You can hear me. We can see you. It's looking good, man. Well, there's a big echo. Oh, let me, oh, that's why. At Zoom, because you're going to hear me through Zoom. So we got to mute one of the audio sources. So we either got to mute Zoom temporarily or we need to mute the audio that you're getting from the browser. You muted yourself on Zoom, but I haven't muted myself because everybody else still needs to hear me in Zoom. But you still get that echo? All right, do this. So you're in a web browser, correct? Something like this? Okay, go ahead and right-click the tab at the top of your browser, and you'll see an option to mute the site. And let's see if that mute eliminates the feedback, but then you still get me real time in the Zoom. So that should eliminate the feedback, hopefully. Yeah, so just whatever web browser you're on. So I'm assuming you're on the Streamlabs web browser. Just go ahead and click the tab at the top. And then you're going to go where it says mute site. And you can actually mute that entire browser. Like any audio that's being pumped through that tab, you can mute that. And so if you're muting that, maybe that takes away the echo. I'm sure you still got me in Zoom, but now you don't have me through the collab.
Josh, are you hearing Tom?
I do not hear Tom. We're trying something new. If we can't figure it out in the next 1 to 2 minutes, I'm just going to start jamming for the rundown to get you guys prepared. But we're going to start something new and start doing a little collaborative session here in the morning.
Okay, perfect.
So,
I thought it was me.
No, you're good. Gotcha. Well, let's do this. Maybe if you're still around 11:30, 12, maybe we can just play around with it. 5-10 minutes, figure it out, get it set up for tomorrow, moving forward. Cool. All right, let's do that. Appreciate you though, man. Sounds good. We will figure this out at a later time, guys. But good morning again. Welcome back. Happy Money Tuesday. We're just trying something new. I want to start inviting some of our students and members on the pre-market rundown show in the morning and do just more of a collaborative session. So it's not just me talking and jamming for 45 minutes. You get other analysis, insight, and really just a good collaborative session that you guys can take a lot of value away from. So we're going to try something new, but for today, it's just going to be me, your beautiful host, Josh. We're going to start the pre-market rundown. We're going to talk about what we got going on for the day, and we are going to get you guys prepared so we can have an amazing trading session. So before we dive into it, hit me with a big old good morning. I'm sure you guys have already hit me with a big old good morning, but if not, post a good morning inside of chat right now. Don, what's up? Steve, 10, Aaron, Joe, hey, what's up, brother? Welcome back. Jonathan, good morning. Trucker Ed has been inside of chats since like 4 a.m. He's crushing it. He's ready to rock. And everybody else, an official good morning and happy Money Tuesday. Let's dive right into it. We are about 6 minutes behind, so we got to make up 6 minutes. That means I got to talk really, really fast today and get, I'm not going to talk that fast. I'm joking, but I got to get through it really quick. All right, we got 24 minutes until market open. Just a few things to discuss for today. In my opinion, limited opportunity. I don't really see a lot, okay? But the SPY and the Qs look really good for today. We'll definitely discuss those, get you guys up and running and prepared. We'll take a look at Affirm today as well, and that's really it. The SPY, the Qs, and Affirm is the only three really good opportunities that I see for today. So with that being said, we will have lots of time to review your stocks for today as well. So post those inside of OpenFloor. And then if you are a member inside of the coaching program, go ahead and post those stocks and those tickers inside of Market Mastery. And then I will go ahead and review those before market open. But let's go ahead and start with the economic calendar, talk about what we got going on for the day. We're pretty much in the clear for today, guys. The only thing that we have to be mindful of coming on up, just a few things. We have CB consumer confidence data at 10 o'clock, right? That's of medium importance. As Tom said, don't know if you heard him earlier, but not really the type of data that should really move the market, but it's definitely something to be paying attention to in the coming months, but not the real type of data that you're going to see the market really react to, right? But just be mindful, 10 o'clock, we do have some data being released here. Coming on up at 12 o'clock, we do have Fed Cook speaking. And then here at 2:10, we have Fed Bowman speaking today. So be mindful of those three events, 10 o'clock, 12 o'clock, and then 2:30. Those are the types of events to be mindful of because you could see the market react. And again, just good to be mindful of what's going on for the day. Other than that, we are in the clear, ladies and gentlemen. All right, let's go ahead and dissect the SPY and the Qs. Let's get you guys up to speed, talk about my personal game plans for both of these today, and we will be all set. So, as always, we start on the daily to identify our key zones, and then we drill down to our lower time frames to fine-tune our analysis to build those what-if plans for the day. What if the SPY goes here? What if the SPY goes there? What would we do? How would we react? What would be the opportunity that we're looking for? We're building those what-if plans to get one step ahead. All right, so starting on the daily, marking up those key zones. Okay, key zones for today. You got this lower zone down here between 542.63 to 542.74. That's going to be our line in the sand for today. Why is that? Well, we had a pretty big drop yesterday, right? We opened, we pushed all the way up, closed this daily gap. We got rejected hard, and we had a very, very strong close near the low of day. We could see a continuation move today where we get a second day of continuation to the downside because we had a pretty big red day, pretty strong red day, and we had a very big rejection off that gap fill. So that leads me to believe that if we do fall below yesterday's low of day and yesterday's close, we can see that continuation move to the downside. So I'm marking up yesterday's low of day and close, and I'm going to label that my line in the sand for today. That's going to be the make or break. Okay, and that zone is here between 542.63 to 542.74. The other thing I want to stress real quick is if you're like 5 cents off, 10 cents off of your zone compared to mine, you're right in line. Sometimes I don't come in and actually dial this in to the penny, right? So like right now it's to the penny off yesterday's low of day and close, right? That's 542.62 to 542.74, right? But sometimes I don't necessarily zoom in that close and get it to the penny because I'm marking up my zones basically like this. So I could be off to the penny like 2 or 3 cents. So I want to stress that. If you're like, man, your zone is This, and my zone is 3 to 5 cents off, your zone's still the right zone. You're pretty dialed in. Now, if there's like a 20, 30, 50 cent discrepancy, we need to dial that in. But again, if you're like 3, 5, maybe 10 cents off, you're looking at the same region in the same area as me. You have a really good defined zone. All right, so again, let's go ahead and just dial this one in while we're at it and get those to the penny levels. So this zone here, right, line in the sand for today, it's between 542.62 to 542.74. If we fall below that zone, I would expect to see more downside today. Where to? First target would be the top end of this daily gap, right? We can see that we have a daily gap here on the SPY that could be getting filled at some point in the near future. The top end of this gap is at 539.62. The bottom end of this daily gap is at 537.02. So if we crack below yesterday's close and low a day, and we see that continuation move on down, our target to the downside today would be down around the top end of that gap at 539.62. And then second target would be filling that gap at 537.02. Okay? We have a zone of support resistance here. I don't know if it's support. I don't know if it's resistance because I have yet to go into my 5-minute time frame and see are we above or below this zone, but it is going to be a key zone to watch for today. That's between 544.33 to 544.52. And then your final zone is going to be up here between 546.72 to 546.95. Those are your most important, most significant zones for today. Then we go down into our lower time frame, the 5-minute, and we see where are we at in comparison to those zones. Are those zones going to be support for today or resistance based on our location and where we're currently sitting at in pre-market ahead of market open? So we have that zone on the daily between 544.33 to 544.52, right? That is going to be an area of resistance at the start of the day since we are trading underneath that zone, right? So we have an idea of where our nearest zone of resistance is going to be. All right, and we have an idea of where our nearest key zone of support is going to be down at that line in the sand between 542.62 to 542.74. Now I can continue my analysis and see if there's anything else that really stands out to me. So the first thing that I want to do is go, yesterday's high a day to yesterday's low a day with a fib extension to get an idea of where could we retrace back to before maybe seeing our next leg down by utilizing that fib extension. So go ahead and grab your fib extension from yesterday's swing high to yesterday's swing low, and this will give you an idea of where we could retrace to before maybe seeing that next leg down. The other thing that I notice as well is we do have a multi-day downtrend, and this downtrend is going to be drawn a little bit differently, and I'll explain why. But we're going back into that high from last Thursday, and what you can do is go ahead and connect yesterday's high a day as well. That would be a valid trend line, right? Off of Thursday's high a day, off of yesterday's high a day. We would have a valid 0.3 of a downtrend coming on up, running it off of those 2 points. But I want to make one small minor adjustment to this trend line, and here's why. Because if I take that trend line from here and I drag it down to here, I do see how we broke the trend line here, and some traders would say this trend line is now invalid since we breached it and we broke above it, but I'm looking to see what happened after we broke through that trend line, right? If we just broke through it and then dropped and never touched it again, well, that's not the trend line. But what happened after we broke that trend line? We got back below it, and we stayed below it throughout pretty much the entire day yesterday. We were validating and respecting that trend line. So that's how I'm able to build conviction and confidence that I want my trend line to be across all of these lows because I see multiple touch points. I see that trend line well respected versus my trend line being up here. Now that's still a valid trend line that you should have on your chart, right? But I want to bring my trend line down because we grinded that trend line like 10 times yesterday. I'm confident that that could be a valid downtrend as resistance again for today. Okay, so I'm going to now build some what if plans. What if the SPY goes here and does this? What would I do? And I'm going to look at the opposite side of the trade as well to remove my bias for the day. I don't care if the market rips 10 points or dump 10 points. I just want to be on the right side of the trade. So I want to remove my bias and look at both sides of the trade. now that I've done all of my analysis and I've done all of my due diligence. Okay, so game plan number one is if we see the SPY open below this zone between 544.33 to 544.52, where would we also be at? Right, if we open below that zone and push into that zone of resistance, what's also right at that zone of resistance? Downtrend resistance, okay? What else is right there up against that zone of resistance and that downtrend? It's also going to be right up against that 61.8 fib extension. So we could already see that there is going to be a strong barrier of resistance right here between 544.33 to 544.52, right? It's a daily zone of resistance. It's a key zone. We have that multi-day downtrend that was validated and respected several times yesterday. And it's also right at that 61.8 retracement level, which is another area of potential resistance. So we have three separate things indicating there's going to be a lot of resistance right here. So game plan number one, if the SPY opens, pushes into this resistance, we get rejected off that downtrend and we stay below that 61.8 fib extension, right? I'm looking to get short, expecting that we see some downside. Where to? Our next key level of support down between 542.62 to 542.74. That's going to be PT number one. If we fall below that level, right, and stay below it, we can continue to move even lower today. Where to? The top end of that daily gap at 539.62. That'll be PT number three. And who knows? Maybe we keep fading and falling, right? And if we do get inside this gap and stay inside this gap, we could fill the gap down at 537.02. That would be PT number three. I don't know why I said this was PT number three. That's PT number two. That's PT number three. Okay, so that's going to be game plan number one with your three realistic profit targets for today. But what if the SPY decides to break the downtrend and break that zone of resistance and we see it turn support intraday today? Well, that would be validating a potential long opportunity. So if the SPY comes up to that zone and that trend line and we break above it just to pull back and retest as intraday support, I would be looking to get long, expecting that we see some upside. Where to? Back up to that next daily zone of resistance between 546.72 to 546.95. Okay, that's game plan number two. And then game plan number three is if the SPY doesn't do anything at this upper level and we just open and start to roll. If we open and just start to roll on over down into this key zone, I would be looking to see what the SPY does off that key zone. We hold above it as support. I get long, back up into that zone of resistance. We come down to that key zone, that line in the sand, and we fall below it, and we stay below it. I would then be looking to get short down to the top end of that daily gap at 539.62. And so that's going to be your third and final game plan for today here on the SPY. I really like the SPY. I like where we're at. We have tons of confluences right out of the gate at this key zone of resistance. So I'm expecting something to take place, some kind of opportunity to present itself. So I want to put a lot of my focus on the SPY right at the start of the day, guys. Okay, moving on to the Qs, right? Key zone of support is going to be down between 473.82 to 473.94. Okay, key zone of daily resistance is going to be up here between 478.17 to 478.42. All right. I want to do the same thing with the Qs as we did on the SPY. Take a fib extension from yesterday's high of day, yesterday's low of day to get an idea of where could we retrace to before maybe seeing the next leg down, right? Just utilizing these fib extension levels as reference points as far as some overhead resistance. Okay. And then finally, I want to go ahead and take a downtrend off of some of these highs, these lower highs from last Thursday, connect it into the high of day from Friday, and then it connects again yesterday off yesterday's high of day. So we still have this multi-day downtrend here on QQQ as well that we are starting to come up to right now at this point in time. Not only that, but we are coming into this 50% retracement level. Not only that is we have yesterday's support resistance right around the 50% fib, right around that downtrend as well. So this is not a daily zone. This is an intra-day zone. here on the Qs. And so I'm going to change this to a prior day zone because I like to see the differences between my daily most significant zones for the day and then maybe some intraday zones that I found from a previous day that could be valid again for today's trading session. So if I go look at this zone from yesterday, it's pretty valid, right? Between 476.76 to 476.89. We came down into it yesterday and saw a massive move to the upside. We came down into it again. We cracked below it, but we snapped back above it instantaneously, showing that we have a lot of buyers present right at that zone. And then when we cracked it, that was our retest level before we made that new low of day. So I can see multiple touch points off that zone from yesterday. Is it as significant as a daily zone? No. But is it still a zone that I want to be mindful of today? Yes. And on top of that, it's right in line with that multi-day downtrend, and it's right in line with that 50% retracement. So the first area that I want to be paying attention to today on the Qs is going to be the zone between 476.76 to 476.89, right? Right up against that downtrend, and that's a 50% retracement as well. So if the Qs open, we push into that zone, push into that downtrend, and we fail to break above it, I would expect that we could see some downside here on the Qs. Where to? That lower zone of support between 473.82 to 473.94 here on the Qs. But if we start to push above that zone and we push above that trend line, at that point in time, I would remove the zone, I would remove the trend line, and just wait to see if the Qs are going to get up to that next daily zone of resistance. And that's going to put you back up here between 478.17 to 478.42. And that would be the next area of resistance that I would be considering a short opportunity off of here on QQQ. But only if we break that zone and break that downtrend. So you have game plan number 1 getting rejected off all that resistance for the next leg down. Right, game plan 2 is if we break through all that resistance and that downtrend, just sitting back and waiting to see if the Qs get up into this next daily zone of resistance. And then from there, see if there's a short opportunity that's setting up. Okay, and so then game plan number 3 is going to be based on this lower level of support, which I'm also going to label the line in the sand for today, that make or break. So game plan number 3 is if the Qs come down into this zone first, and we hold as very good support today, that would be an area that I'm looking to get long here on QQQ, as I'm expecting to see some upside. But if we come down into that zone and we crack below it, and we see it followed by a retest as intraday resistance, from there, I would be looking to get short. Where to? The top end of this daily gap here on QQQ. And the top end of this daily gap is down at 471.30. That would be PT number 1 to the short side if the short opportunity presents itself. And then if we fall inside of this daily gap and stay inside of this daily gap, your final profit target for today would be a gap fill down at 468.18. And so that's going to be game plan number 3 for today here on QQQ. So I like the Qs a lot. I like where we're at. I like the location. I like the opportunity that's in front of us. I like the SPY as well. And so if I had to choose between the SPY and the Qs, which one stands out to me the most, which one do I like the most, I actually choose the SPY. And the reason for that, we still have that valid fib extension, right, in line with a daily zone of resistance, in line with a valid downtrend. And so the one thing that stands out to me with the SPY is, hey, we're coming into a daily zone of resistance, into that trend line, into that fib extension level. The Qs, we're coming into an extension level. We're coming into a trend line, just like the SPY, but we're coming into a previous day zone of resistance, which is a lower probability zone for me. So based on that, that's why I like the SPY more, and that's why I'm going to put more of my focus on the SPY right at the start of the day, guys. Okay, so those are your game plans on the SPY and the Qs for today. And then lastly, Affirm for today. Affirm had a pretty big bounce yesterday. We had a gap up. We ripped big. We closed near the high of day. So that was a very strong close yesterday with a massive increase in volume, right? So what could we see? A possible continuation to the upside today on day number 2. Ideally, we want to see a gap up on day number 2, pull back into the previous day's close and high, hold that region as support, and then see the continuation move to the upside. But Affirm right now is not going to be gapping above that zone, but it doesn't mean that it can't set up. It's just not the ideal highest probability way for it to set up, but there still could be an opportunity. So what are we simply looking for? We're looking for a break and a retest off that zone that was created from yesterday's close and high a day. That's between 33.69 to 34.15. All we're looking for is a strong break through that zone and a proper healthy intraday retracement and retest of that zone as intraday support. If we see that break and retest, I would then be looking to get long, expecting to see that second day of upside continuation here on Affirm, and I have a target up around $36 for today. So if we see that set up and take place on Affirm, I think there's really, really good opportunity to get long up towards around $36 here today. And that's all I have, guys, right? Scanned 70, 80 stocks like I do every single morning, looking for the top 3 to 5 stocks that stand out, that are looking to provide the best of the best opportunity for today. Today, limited opportunity. It was slim pickings. We have 3. Spine the Qs. We're always looking at spine the Qs. And then we have Affirm for today as well. And the only other one that I would even consider is NVIDIA. If NVIDIA pulls back to this 118.32 to 118.74 level, and we hold that zone as intraday support, I would actually be considering a long position on NVIDIA back up to 124. That's way on the back burner. Don't know if it's going to set up. It's an okay opportunity. That's why it's being placed on the back burner. So again, if NVIDIA opens, pulls back to that 118.32 to 118.74 zone, we hold that as intraday support. I would simply look for a long position up to around 124 there on NVIDIA. So that's all I got for you guys today. What else are you guys looking at? Coin, coin, man. Yeah, today is definitely not the day I saw anything with coin. Bitcoin's rolling hard, right? Coin is starting to roll pretty hard as well. So at this point in time, since we're seeing some volatility, some volume, and some big movement on Bitcoin, you absolutely need to be watching Bitcoin along with coin, right? Again, Bitcoin rolled on over the past few days. What have you seen with coin over the past few days? It's rolling over pretty hard as well. So again, at this point in time, if you're looking to trade coin, you should also be looking at Bitcoin as well. If you see a long opportunity on coin, but you see Bitcoin is still dumping and it looks super bearish, I would probably pass on the long opportunity with coin, because coin's going to move in sympathy to Bitcoin to a certain extent. Okay, so with that being said, just setting expectations. We did come down into a pretty nice zone of support on coin yesterday, and this is still a key level that I want to watch. That's going to be here between 205.84 to 207.96 is a pretty key zone of support for a coin. And then I go look at Bitcoin as well. Bitcoin actually came down to a pretty key zone as well yesterday. We came down to this zone on Bitcoin between 60,173 and 60,764. We came down into that zone. We closed inside of it. We're starting to see a push today off that zone. So if Bitcoin holds that zone and we see a push, we see some upside, that could bleed into coin, and we could see some sympathy movement on coin, right? And that's what I do like, is the fact that Bitcoin came down to a valid key support level. We saw a nice push. Coin came down to a valid key support level. We saw a push. So if coin comes back down into that 205.84 to 207.96 region today, and we hold it as support, I would start looking to maybe get long here on coin, expecting maybe a nice big bounce off that key daily level of support. And I would say your first target to the upside, if you're just looking for a simple, little day trade opportunity, I would say realistically back up to like 217 to 219 on coin. But I'd really want to see it hold that lower zone of support. All right. Markets open. We are all set, ready to rock, ready to roll. And last one real quick, Apple. Let's take a look at the Apple. Yeah, so I'm waiting for Apple to come back down into this 203.45 to 205.74 region. we have a lot of confluence there. It's a golden pocket entry off that daily fib, right up against that daily 20 EMA. And there's going to be a lot of great support back down at that region, because this is where we basically put in this 1 hour hiccup candle before we saw that second impulsive move to the upside. And this was that long duration of consolidation that we saw here on Apple. We had that first big impulsive move to the upside. We consolidate at that zone nearly for an entire day. We break out of that consolidation and we see the second impulsive move to the upside. And it left us with a 1 hour hiccup candle. We know that 1 minute hiccup candles are respected as support resistance. The higher the time frame, the more significant. So I'm watching this lower zone of potential support on Apple down around 203.45 to 205.47. That's also a golden pocket entry off that fib retracement. And it also puts you right in line with that daily 20 EMA. So I like the long opportunity on Apple down at that lower zone of support. Now, as far as any short opportunity, the short was last Friday. That was the best one. Yesterday, whipsaw price action. Today, I don't really see an opportunity to get short. I simply want to be patient to see if we do roll on over into that lower zone and go from there. All right, we are all set, ready to rock, ready to roll, ladies and gentlemen. So let's go look at the SPY, because we did have the SPY opening right around that zone at the start of the day. Definitely want to keep this on high watch. Let's take a peek-a-rooski at those hedge pressures and see what we're working with here. All right, so hedge pressure today, you're running a 544.50. I like that. Look at that. Weekly hedge pressure right at that zone, right off that trend line. Ooh, count me in. We get up to that 544.50 level, I will be looking for a short. Is that the same hedge pressure as yesterday?
Oh, yesterday was 545.50.
Okay. All right. I saw the 0.5. I was like, is that the same as yesterday? Or are these updated? Okay, those are updated. And you got a 540 monthly hedge, which is right above the top end of that daily gap. So I want to see the SPY come up, tap that weekly hedge pressure level, get rejected, and then look for a short, expecting that we see some nice downside today. What do we got with the Qs? All right, so here on QQQ, we are working with a 476.50 weekly hedge pressure on the Qs today. That's 476.50 with a 470 monthly hedge. Now we sit back and be patient, guys. That's it. Sit back, be patient, and wait for the best of the best opportunity. Wait for the market to come to you. set up exactly the way that you'd want to see it set up. Follow your process, right? Identify your confluences, build your trade plan, accept the outcome, and wait for the validation of the trade, right? Just follow your process step by step by step, and you're going to find great opportunity. You're going to nail these amazing opportunities, and you'll be profitable. So sit back, be patient, and wait for the market to come to you. Then we'll look to take that next step. And the next step is, what is the opportunity that's presenting itself, if any? So if there's anything else you guys are looking at, we can definitely review it. So we looked at Apple, we looked at Coin. I want to maybe do a little bit more TA on Apple for you. I mean, I'm a little biased waiting for it to come on down into that 204-ish level, but there could be something here. And if we're looking at an area of, resistance on Apple, I would still be watching that 211.28 to 211.63 region. And that was the previous area of support where we had that break, that pullback, that slight next leg higher. We cracked below that zone, retested it on Friday. That's where we got short. We hit it again yesterday, got rejected off that zone, dumped on off. And if we come back up to that region today and we see good price development and good price action that indicates we should get short, let's maybe look for a short opportunity off that, zone of resistance there on Apple. Right? And if we can stay below that zone, right, that could lead to the next leg down, and that may give us that lower target that we have where we're looking to get long. So I would be watching that zone on Apple again, and that's going to be up here between 211.28 to 211.63. And let's see if there's an opportunity presenting itself to get short off that zone.
Good morning, Josh.
Yo, what's up, man? Good morning.
Not much. While you do that, on the top of your head, do you know how many new students we have?
Off the top of my head, how many new students? So what are we going back like over the last 30 days, 60 days, this year?
Let's say 30, 60.
So yeah, we have about 15 new students over the past 30, 60 days, give or take, something like that.
Awesome. Okay, so I'm just going to put out a question. I mean, just in case for the new students that maybe don't know what to ask. I know you went over the trend line on SPY from Thursday and Mondays. You marked it down from higher days of Thursday and Monday. I just want them to know that you only count those valid during open market hours. So hopefully they don't get it mixed up as to, well, mine doesn't match yours or anything like that. For all the new students that are here, if by any chance you didn't understand, you understood it, but not all the way on that trend line from Thursday and Monday's high of day, what he explained, hey, just put your hand up. I guess we'll take a vote. Let's see how many understood that part right there. And if anything, I mean, if we see a good amount of hands going up, hey, maybe Josh can go over that later on today, around 10 o'clock again.
Always, man. Again, you guys have any questions or any kind of confusion or concerns, or you're like, I just don't understand that. Open the mic. Say, hey, I do not understand what you just talked about. Can you explain it? Absolutely. If we're in a trade, I'll say, hey, wait 5-10 minutes. Let's manage the trade, close the trade out. We'll go from there. But I mean, I do these sessions from 9 to about 12, 5 days a week. That's 3 hours that you guys have access to me when the market's open, the market's live. We're not trading the entire 3 hours, right? Maybe out of the 3-hour block, like how much of that time are we actually in a trade, managing a trade? 30 minutes. You have the 30 minutes for the rundown. That's 2 hours that we're usually sitting here analyzing the market, helping you guys out, answering questions. So utilize that time on a daily basis.
And not only put that question out, because I know whenever I first started, I used to count the trend line during open hours and pre-market, post-market hours. I was making my trend line during those hours. I mean, I was counting every candle as trying to do a trend line, but it is more valid during intraday when you're creating those or open
100%.
market during those trend lines. So
Absolutely.
once again, I know you didn't mention that right now while you were going through the SPY, and I understand you have a lot going on also teaching all of us, but I noticed that question, I mean, that got missed in there. But for the new students, once again, that may not know what question to ask or anything like that, hey, once again, don't be, we're here to help, all of us. So don't feel shy, scared.
Yeah, and so
Just
to expand a little
raise
bit
your
on,
hands.
upon what you said with trend lines, like 100%. It's like, am I connecting intraday data points and pre-market data points? When I say a data point, I'm just looking at points. So like, am I looking to connect from an intraday point into a pre-market point to connect it into the next day? No, I'm looking at intraday points, right, only. And if it just so happens to be respected in pre-market, post-market, great. But I'm not connecting my trend line off a intraday point, then a pre-market point, then an intraday point. I'm only going from day to day to day, intraday points only, to identify the highest probability trend lines, for example. And if it just so happens that it's respected in pre-market, post-market, great, right? We could utilize that as more validation, but we're not connecting those points. We're only looking to see if it was even respected in pre or post-market. We're only going day over day. So the easiest thing that you guys could do to make sure that you're finding the highest probability trend lines is go into a, say, 5-minute time frame and just take pre-market and post-market and shut it off, right? And then you can say, all right, here's my trend line. I have no pre-market data. I have no post-market data. I can't get confused, right? Identify your trend lines with no pre-market, no post-market. And then when you go back into, say, your time frame where you have pre and post on, maybe see if it was respected in pre-market, post-market, just to validate it even more. So that's one little thing that you guys could do just to eliminate some of the confusion. And again, to identify like the most valid trend lines, for example.
Oh yeah, I mean, I know I think her name was Catherine yesterday that asked the question on the trend line and everything. And this could also help her out if with the whole intraday, post-market, pre-market, how to
Absolutely.
identify them and
these
see them.
questions, these discussions and topics, and just bringing this up, giving me the opportunity to expand upon it, it's amazing. These little things really do make an impact, and they really do help traders.
So once again, anyone that still new and would like a little bit more, I guess, extra time on that, hey, just put a thumbs up, put yes, please. I mean, anything, just so we can go over it again later on whenever 10 o'clock comes and there's hardly anything going on. I'm sure Josh don't mind jumping in and helping out. That was just my input on that part.
Yeah, brother, we always appreciate it, man.
I have a question on your trend line right now.
On the SPY?
Yes.
We're going to call it the SPY moving forward. All right.
I love it.
What's the question?
Why did you not go to that high of day on, I guess it was yesterday?
So like right here, for example?
Like
off yesterday's high day?
Yeah.
Yep, so that's a valid trend line, 100%. I would still put that trend line on the chart. But the reason I took my trend line and I drug it down is because when I drag that trend line down, you see how many more touch points we had over the duration of a few hours off that trend line when I drag it down?
Yeah.
Yeah. And so the starting point, you are correct. It's like, okay, this is the trend line, 100%. You could be coming into a 0.3 of that downtrend today. That is a valid trend line. But I can justify bringing it down. And let's just say we did it. We're like, okay, I see that we had a lot of these lower highs. I'm curious, what if I did pull the trend line down? Is it valid? I could justify that is another valid trend line, right? Because we had 1, 2, 3, 4, 5, 6, 7 additional touch points off that trend line yesterday. Even though we
Right.
broke through it here and breached the trend line here, I'm looking what happened after the fact. If we would have broken the trend line here and then dumped and never retouched it again or retested it again, I would say, well, we can't justify putting a trend line like this. It would be up here. But what happened after we broke that trend line? We came up and hit that trend line, right? 7, 8 more times yesterday. That's another trend line that I want to keep on watch today as well. They're both valid. This one is just a little bit of a different trend line I'm drawing, simply due to the additional touch points that we see off that trend line after we broke it yesterday. So I can justify that being a valid trend line that I would want to watch for today as well.
Okay, thank you.
Yeah, absolutely. But yeah, 100% guys. Put a trend line from Thursday's high a day, connect it to yesterday's high a day. This is still going to be a valid trend line to keep on watch. Absolutely. I just like to keep my chart as clean as possible. That's why I'm removing that top trend line now. So if we ever see this lower trend line that I still have on the chart invalidated and it's not being respected, what am I going to do? I'm going to remove that trend line and then drag it up to that high a day, because that's going to be our second most valid trend line for today's session.
And on that part, Josh, I believe on the courses, you state that third touch of the trend line is pretty much it's a very significant where we could still see it going down even more. Now
That's
on this
correct.
one, it didn't do that, of course, from what I'm seeing in my end. But if I'm not mistaken, in the courses, you also say if it touches 4, 5. I mean, 4, it's less chances it's going to work out. 5, again, more chances it's not going to work out. But after 6, okay, you know what?
Starts
Maybe
to
it could play
strengthen
out.
itself again, 100%. So you
Which
need
on
2
this one, it
points
touched
to
like
draw the
7
trend
times,
line,
right?
right? You need 2 points to draw the trend line. And if you come off of a lower low into a 0.3 of a trend line, it's a high probability valid trend line where you most of the time see a reaction off 0.3 of a downtrend, for example, if it's coming off of that lower low, right? So those are high probability trades off 0.3. But when you come back up into it on a 0.4, what do we typically see? We typically see those 0.4 breaks, right? So we're not looking to get short off that downtrend on 0.4. Honestly, we're looking to see if it breaks the downtrend on 0.4. But let's say it does come into a 0.4 and it gets rejected again, right? And it comes up to a 0.5. Would you short it? No, the probabilities are still pretty low. If it hits off 0.5, gets rejected, and comes up again, then that trend line starts to become more validated. So it's 0.3 is the highest probability short. 0.4 and 0.5, those are very low probability shorts. We're not looking to take a short on 0.4 or 0.5. But after 0.5 and we come up to a 0.6, for example, we start to revalidate and that trend line becomes even stronger from that point forward. Just from, again, my experience in the market.
So with yesterday's 1, 2, 3, 4, I think 4, 5 touches it happened, you wouldn't consider those point of touches on that trend line, or you wouldn't consider it valid?
No, the trend line's valid. Yeah,
I
that
mean,
trend line is valid, 100%.
You'll consider those as touches as well?
Oh, yeah.
Or not?
Yeah. I mean, we
Okay.
grinded that trend line for 3 hours yesterday. Every time we came up to it, after we had that little break through it, we hit it, got rejected, hit it, got rejected, hit it, got rejected, hit it, got rejected like 7 or 8 times, right? So I can see that we grinded that trend line all day yesterday is pretty tough resistance. I think it's an area to keep on watch for today as a potential valid area of tough resistance again, simply because we grinded it for like 2 to 3 hours yesterday. We couldn't break through it, and every time we touched it, we got rejected. So I would say that this is going to be a valid trend line.
So right now it's just showing a lot of strength as
A lot of strength as resistance. I mean, the amount of times we hit it yesterday and got rejected, that really shows that, traders were, respecting that trend line. It was, a very, very tough barrier of resistance that we tried to get through. We failed, and then we hit it, 7 more times, and we tried, still couldn't get through it, then we dumped pretty hard, right? And so that's the first thing that stands out to me as to why I want to watch that trend line, just to see if it is valid today. But then I have more confluence as well. So what else is up against that trend line? Weekly hedge pressure resistance, daily resistance, and it's right up against a fib retracement level as well. So not only is it a pretty valid trend line that we see was created yesterday, it's also at the same exact price as weekly hedge pressure and a key daily zone of resistance, which makes me even more convicted and confident that that trend line could be respected again today as well. So nothing has really set up just yet, guys. Nothing is set up. Still waiting for the SPY and the Qs to give us something. Looking at some of these potential swing trades. Not really seeing a whole lot at this point in time. But swing trade watch list, just so you guys know. You guys can go do some analysis. See what you guys see. It never hurts to add these to a watch list and just analyze them. And then compare your analysis to mine, regardless of taking these swing trades or not. It's pretty cool to be able to go in, do your TA, analyze it, and then just watch them play out. You got Shopify on watch for a swing trade, SHOP. BA, ticker Boeing, for a possible swing trade as well. And then Uber was something we were watching pretty much all of last week, and that swing trade played out pretty nice. No longer on watch for a swing trade on Uber because it's already hit that zone. It's already seen a pretty nice $2 pop to the upside. But this is something that you could have analyzed with us. We were breaking this bad boy down and talking about best entries, best opportunity on Uber. Even if you didn't take it, you could see it play out and learn from this opportunity and at least gain more experience by analyzing it with us. So Shopify looks good coming on up. That's on watch. And then Boeing, ticker BA, coming on up. That should be on watch as well. CVS, I'm going to take CVS off the watch list. And I'm going to take Uber off that watch list as well. So other than that, we got Boeing, Shop. I'm still in that OLED short. This is something we were talking about, I think it was last week. Not wanting to get long. We were coming up to a pretty key barrier of resistance. And so as we started to see it topping out, I did take a short position on OLED from that analysis from last week. So I'm just going to keep that on the watch list because I'm still managing that swing trade. But up and coming, Boeing may be possibly setting up today into tomorrow for a long. We'll see. And then Shopify as well. But right now, we're just sitting back on our hands, being patient, waiting for the market to come to us, whether that's the SPY coming to one of our zones first, or whether that's the Qs. And QQQ did just come up to weekly hedge pressure. But that's it. You got one reason to possibly even think about getting short off weekly hedge pressure on the Qs. We need at least 2, ideally 3 separate reasons. So QQQ did run up to weekly hedge, did get a nice rejection, starting to pull back a little bit, but still no A+ opportunities in front of us.
I did put one out there on Market Mastery.
You
Hopefully
did?
in the next 5 days, yeah, it comes down to my zone or.
Oh, okay. You were up there at the top. Team. Is that the ticker? Team? Team. Okay.
Yeah.
I thought you were tagging team. When I saw it, team, I thought you were tagging team for some reason. I didn't realize it was a stock. All right. I'm going to do some just unbiased analysis, not even looking at what you have. And then, we can compare apples to apples. So I'm just going to analyze it from my point of view and see if anything stands out to me at first glance. I mean, it looks like it could be setting up for a possible daily reversal. There's a few things that stand out to me. Number one is we do have a defined zone of daily support down around 156.19 to 157.08. I first started to notice this zone just through these initial lows that we had here back in June. We had some more price action, validating that zone here more recently as well. But I wasn't convicted enough in the zone just looking at, these prior lows here back in June. So I had to go back a little bit more to really build that conviction. But I can see this is a pretty key level of, resistance that we've back tested before dropping. When we broke back above it, we held it as support, came back into it, held it as support again. So these additional points back here in 2023, right? One extra retest, 2-3 points, and we can see how it was valid here as well. I'm starting to become pretty convicted that this is going to be a solid zone of support coming on up. And again, that's between 156.19 to 157.08. That's number one. The second thing I notice is we have some confirmed bullish divergence. So we see that the stock made a lower low on the daily, but at that point in time, we actually made a higher low on the RSI. That is called bullish divergence. That's a pretty decent indication of a possible reversal on a stock. And when you see divergences on your higher time frames, it's pretty significant. All right, so we got some confirmed bullish divergence. And then if we take a look at this fib, we can go with a fib retracement from this swing low to this most recent swing high, and start to ask ourselves, hey, what if TEAM comes back down to that zone of support, right? Is that a key support level? It is. Is that going to be off of the fib level? Is that fib possibly going to be respected and validated? It could. That would put you into the OTE zone based on that fib retracement. The OTE zone stands for optimal trade entry, and that's the midpoint between the 78.6 and the 618. So the midpoint is that zone of daily support, right? We've already seen some confirmed bullish divergence, which is a pretty strong indication of a possible reversal. So then we just start to paint a picture. What if TEAM comes on down, hits that level of support, right? And also wicks out of the OTE zone. It respects it. And then we start to see a bounce. We start to push on back up. What kind of opportunity would that look like? I would start to see a little bit of this inverse head and shoulders formation. There could be a possible clean, proper reversal formation setting up. And that's an inverted head and shoulders. There would be your left shoulder. That would be your head. That would be your right shoulder. The right shoulder would be forming at a defined zone of daily support, number one. Number two, off the left shoulder low, which is very important. Number three, it would be coming down into the OTE zone based on that fib. And then finally, we've already seen confirmed bullish divergence, which is a pretty strong indication on the daily of a possible reversal. And just like that, if we come down into that zone, right, we start to bounce and push, visually, that would give us a reversal formation on TEAM. So the way I look at it is I would want to wait for TEAM to ideally, throughout the rest of this week, maybe coming into early next week, come on down to that 156.19 to 157.08, and then hold that region as support for at least a couple of days. We hold that level of support and we start to see buyers stepping back in and we start to push out of that zone to the upside. That's starting to look really, really good that we could see this daily reversal play on out, and there could be some more upside in the near future here on TEAM.
Okay. I'm just looking at the zone that I have posted. Okay, I have posted that I would like to see it come down to 158.50 to 157, and to give it a wiggle room of 156.
You said 158
50
down to 157. Yeah, I mean, you're close. The top end of my zone's at 157. Bottom end of my zone is at 156. I mean, at least you have one of your zone levels right in line with mine, down around that 157. I like it. Yeah, 156, 157 would be like an optimal area to start looking to get involved in this trade if we come down there. Your analysis is spot on. I like it. That zone, pretty damn close. on this type of trade, depending on where you get in, we just got to do some risk reward here. Right? If this comes down and hits that level and we have good price action and we start to push on up, that would be that daily higher low. So if we start to see that daily higher low forming off that zone of support, right, where would we put stops? Right below that zone, right below that higher low, right? That would be the proper placement for the stop. So let's go ahead and assume we come down, we bottom, we hold that zone, we start to push. We would want to put stops below that zone. So I'm thinking maybe $1 to $2 of risk. You don't want to keep it too tight because this is definitely a day trade that would probably turn into a swing trade. If it comes down and hits that zone and it bottoms, you can day trade it that day that it starts to pop off that zone if that happens. But this is probably a day trade that will turn into a multi-week swing trade, right? Because we see opportunity for this to follow through to the upside for a couple of weeks at least. So I wouldn't want to put stops too tight because I do not want to get prematurely stopped out. I would want to go probably $2.50 of risk just to let it breathe. My first main target would be retesting these prior highs, right? That's nearly a 4-to-1 risk reward, even with $2.50 of risk. Now, technically speaking, we could tighten that risk up a little bit and put it about a 154.75 stop. I think that's pretty realistic as well. It gives you about $1.70 of total risk. I like the location of that stop as well. I don't think you would get prematurely stopped out. But if you can open your risk up a little bit more to maybe 2.5 points, I think that's even better. But I could justify $1.60 of risk, putting stops around 154.75. And again, target doesn't change. Target's still the same, retesting these prior highs. That gives you nearly a 6-to-1 risk reward. But I would expect some follow through if we see that inverse head and shoulders play out on the daily. I wouldn't expect us to stop at those prior highs. I would expect us to see a little bit more follow through and start to see that reversal play on out. So with that being said, that would give us a second profit target. And I would have to say a second PT would be up around like 171.18 to 172.53. And at that point in time, it would probably put you right around that 50 SMA as well. So by the time we get that move on up into that zone of resistance, your 50 SMA would most likely be sitting right there as well, which gives you a very realistic second profit target to the upside, up around 171.18 to 172.53, which gives you a potential 9-to-1 setup if your final PT is hit on that that swing trade opportunity. So that's how I would build a plan, and that's how I would look to get involved on that trade.
I had posted PT or take profit at 165 and then 176.50. I was gonna put the other one that you mentioned, but I said whenever I get close to that area, I'll see how it's acting. If I should take profit at that moment.
Yeah, PT1, I think 166.30 is a very realistic PT number one. So I think you have 165. Yeah, that's fine. I see 166.23. So if you want to scale out at 165, I think that's realistic. And then I have another realistic target right there at like that 172 region. You're at 176.50. I just think at that point in time, personally, if we do pull back, we set up and we start to push, by that time, that 50 SMA will probably be sitting right at that zone of resistance, as to why I think that's a better realistic second target at that zone between 171.18 to 172.53. So I would readjust my TP2 down just a little bit, but your TP1 is perfect. And it's a solid risk reward trade as well. And I like the setup. I think it could definitely see that daily reversal and see some upside. So, dude, that's going on the swing trade watch list, that's for sure.
And I did have the what you call it, analysis at 157.50 to 156, but then I changed it at the end. Why did I change it? Oh, because then I saw the daily candle, and I said, okay, let me go from the body to. I was just trying to get more points that it
You're
touched.
just tweaking your TA a little bit. Yeah, man.
Yeah, that was the only reason. But I mean, right now that you mentioned, I said, well, I guess
You were spot
I had
on.
seen it correctly.
Yeah, you saw it correctly. I mean, I think that's a good read. Good opportunity. You read it correctly. You see a potential long coming on up. Maybe some of my analysis opened your eyes a little bit more as well. Gave you a bit more clarity. You're like, oh, I didn't even recognize these things. That really validates the trade even more for me. But I think it's a good opportunity. I think you read it correctly. And I think it should be on a swing trade watch list for sure. I think there's some opportunity coming up.
Well, let's go, team. Looks
So
like SPY may be coming up.
yeah, it's getting there little by little. We're waiting for it to get up to that one, that 544.50. So considering commissions and fees and such, at what point would a trade be considered profitable or worthwhile? I'm still paper trading, but I want to include that in my thinking when I'm looking at quick scalps. So here's the thing with me, Jonathan. I don't really focus a lot on my commissions and fees. I don't. It's just the cost of doing business. So I don't really, incorporate commissions and fees when it comes to my P&L. I just look at it as the cost of doing business. Same thing with my professional fees that I pay. I don't really look at that as impacting P&L or impacting a certain trade to consider is it profitable. I don't even look at that as a part of the trade when it comes to commissions and fees. I just look at it as, hey, those are going to be there. It's a cost of doing business. I don't know if that helps you at all, but I don't really personally, again, consider commissions and fees and look at commissions and fees, and then based on, basing trades to see if trades are even worth it based on a commissions and fee structure. Personally, the trade's worth it. The trade's worth it. If you got 5 reasons to take the trade and your risk reward's 5-1, regardless of commissions and fees, you take the trade. Yeah, and if you're trading shares, like you don't got to worry about commissions and fees with shares with most brokers. Free commissions fees. You're trading options. I mean, I think the standard is like 65 cents per contract, right? So I mean, if you're doing one contract in and out, you're going to pay $1.30 in commissions and fees. Then you have like ECN fees and routing fees. You'll probably be all in at $1.50. That's just one contract round trip. So on 10 contracts, you're talking $15 of total commissions and fees. $15 like round trip for like, say, 10 contracts, for example. So, I mean, it gives you a baseline of what you could expect commissions and fees. And if you wanted to say, hey, I'm going to build that $15 into my risk, you could do that if you wanted to, but I wouldn't put too much thought into commissions and fees with your trading. Come in, identify the best opportunities you can, right? If your edge is present, take the trade. That's it. And don't really let commissions and fees tie up too much of your mental real estate. On smaller accounts, yeah, definitely. You kind of gravitate towards that thinking like, man, on a small account, commissions and fees will add up pretty quick. It's like I have a $15 trade, but my commissions and fees were $5. Like, what the hell? Yeah, you notice that on a small account. When you start trading a larger account and you put on a $500 trade and your commissions and fees were $15, you don't even look at that. But if you're making $30 and your commissions and fees are 5 or 10, you're kind of like, dude, that's a lot. You know what I mean? That's 20% of my profit in commissions and fees. So on a small account, definitely that's something to think of. But as you start to migrate into trading larger amounts of capital, again, it's just something that you don't really think too much of, right? Just the cost of doing business. That's it. So SPY is slowly getting to that daily zone of resistance, number one. Number two, we got that 544.50 weekly hedge pressure. Number three, it's right in line with that downtrend that we have over the last couple of days. So right now, just looking to see if the SPY can get up to that 544.50 region and just see what happens. That's it. It's like, I don't know what's going to happen, but I can start to paint that picture. It's like what could happen. and then start building plans around, you know, the what ifs. Instead of just sitting here for 10 minutes doing nothing, I can build some what if plans and be prepared. So let's do it. So what if the SPY comes up into all that resistance and we get rejected? Like, what if that happens and I see a reason to get short? What would I do? I would get short. Where to? Down to that next daily zone of support. So I have my target. If I get short at all that resistance, where would I put stops? Right above all that resistance. So what would my hypothetical trade plan look like? You know, ideally getting in as close to that zone of resistance as possible. Targets could be down at that next daily zone of support, that line in the sand. And, you know, on something like this, maybe put stops, you know, 30 cents above all that resistance, just to give it enough breathing room, right? Make sure I don't get prematurely stopped out. So this is a hypothetical what if plan. You know, what if the SPY comes up into all this resistance and I see my reasons to get short, right? I get short. What's my stop? 30 cents above all that resistance. Is that a realistic starting point for a risk? I think so, right? What's my realistic target? It's going to be down at that lower zone between 542.62 to 542.74. What kind of risk reward is that? That's a 5-to-1. So I could even go a little bit more risk if I wanted to. Say I could step this up to, say, 33 cents of risk. I could step this up to 50 cents of risk. I can really let the sucker breathe, right? And I still have a nice little 3.42 to 1 risk reward. So I'm still getting that 3.5 to 1 risk reward with 50 cents of risk. But I think realistically on this type of trade, being a boom or bust off all that resistance, I'm thinking 30 cents is plenty. That's a 5-to-1 risk reward. Does it meet that minimum requirement of a 2-to-1? It does. So great. I know where my ideal entry would be. I know how much risk I would ideally give it. And I know what my reward would be. I know where my target's at. So then I can just go ahead and get positioned, right? Is this going to be a 5, 10, 20-minute long trade where I can trade 0 DTEs? Right? Is this something that may play out over the course of an hour where I want to go trade a Friday expiration, buy myself a little bit of time, get a contract with a lower theta, right? To where, hey, I can hold this for a couple of hours and not see my contract getting eaten up by theta and all that time decay. So now I can think ahead. Well, probably a couple hours, I would say. I think that's pushing it. I mean, I think it could honestly play out in 20, 30 minutes. But let's say it's a slower move down and it does take an hour to 2. Would 0 DTEs be the best ones to take? Probably not. I would start shopping a Friday expiration. So now you know not to trade 0 DTEs on this trade, right? You know the trade maybe a weekly or go the next Friday. Buy yourself some time. Great, right? What delta do I normally go with? Let's say you go with a 40 delta. What's going to be my risk per contract? What's going to be my reward per contract? Start doing that math ahead of time. If you're trading a 40 delta, and you have 33 cents of risk, that's 1/3 of $1. So what's 1/3 of that delta? My math is going to be off today, but it's like $12.50. So I know I'm going to risk about $13 per contract, but I also know I can make 5 times my risk. So what's that going to be? It's going to be like 60 some cents, like maybe 65 cents, give or take. So I know I'm going to risk 13 cents a contract or $13 to make 65 cents a contract or $65. So I know my risk per contract. I know my reward per contract based on my risk reward, assuming I'm going to be going with a 40 delta. So great. Now I can get positioned. Okay. Like how much do I want to lose on this trade? I don't want to lose more than $130. Okay. How many contracts could I take? 10 contracts to not lose more than $130, but 10 contracts could pay me $650 if I'm right on this trade, if my profit targets hit. So I know I'm going to go further out on expiration, trade a 40 delta contract, and my max position is going to be 10, so I don't lose more than $130, but I have potential to make 65 based on this plan that I have in place, just in case, right? So boom, I've already built a plan. I'm one step ahead. I already know what I'm going to do if the opportunity presents itself. Instead of just sitting around doing nothing and waiting for the stock to hit your zone, then having to scramble to do this and missing trades and then chasing the trade because you're late on the trade. Instead of going through all of that, right, get prepared now. So all you have to do is simply react if the opportunity presents itself, right? And that only took a couple of minutes, and that's me explaining it. We can do this in our head in about 20 seconds. Okay, so we have a short plan in place, right? What if the SPY comes up, breaks all of that resistance and pulls back and holds it as great support? Well, I'm not going to get short. I would consider getting long for a break and retest. So if we come up and break all that resistance, pull back and retest it as support, what would I look to do? Get long. Where to? Target. Next zone of resistance. Where would stops go? Below all that support. Follow that same exact process that we just did to go ahead and map out your long plan if the long opportunity sets up. So now what have you done? You built a short plan. You've built a long plan. You have 2 plans in place just in case. Regardless of what the SPY does and how it sets up, you can capitalize on the opportunity that presents itself. That's it. The market wants to push up, get long. You got a plan. Market wants to dump on off, get short. You got a plan. You already know what you're going to do when the opportunity does present itself. You are prepared. Now you sit on your hands and you wait. Give me 1 second. I'll be right back. But keep that 544.50 on high watch, guys.
Morning, everybody. What are y'all doing?
What's up, sir?
How you doing, Tom?
Good yourself?
I can't complain. Woke up this morning.
Exactly right.
Another day to make some good trades, get ahead a little bit, enjoy life.
Amen to that.
Hold up, I gotta cut my music off. You're quieter than Josh was. What'd you say?
Said amen to that.
Oh yeah. Yes, sir. I'm up over daily goal right now, so I'm in my sim account, just dicking around, waiting for the next opportunity to present.
What I'm waiting on, I haven't placed a trade yet today. Still babysitting another EA trade. So other than that,
The one you entered the other day?
yes,
EA is the game. That's it, right? The same company, EA Sports.
that's it.
Like, I don't understand why they didn't get pumped up instead of GameStop, to be honest. They're the ones that make all the freaking games, but you know.
Right. And in reality, what does GameStop really do today? I still can't figure that part out.
They rip you off. They resell the games for double what you sold them to them for. Well, they had a nice little pop yesterday. EA.
Yeah.
What are they doing?
Down a little bit today.
Just a little bit. Expected after the big, giant move up yesterday. Is that news driven? What was that?
Partially, but it's also, if you look at go back like 3 or 4 years, it really respects the upward trend line. And I was doing some research. I'm looking for a breakout above about 144 into the 145 range.
144 into 145.
So
I can see that, those previous little spiking highs from February. I'm starting from fresh, doing a little bit TA myself.
Right.
It definitely has some more upside potential, that's for sure. I would be worried around the 143.30 line. That seems to be the start of a supply zone.
Okay. That's
Just
good.
something to keep on mind. I mean, there is no supply at all-time highs. But is this all-time highs? It is not all-time highs. Let's go back just a little further here. Yeah, I would expect a little bit of a hiccup around that 143 level. It's June's resistance and January's resistance from back in 2022. And then it's also the start of that supply zone from back in what is that, March of this year, say. That candle from end of February on 226. I would consider that my supply zone, which we kind of just came in and tapped off of yesterday.
Right.
Not a strong supply zone, it's a balancing, but it's still something to keep on watch just in case.
Oh, absolutely. Like I said, I've already taken 70% of my profits, and
Hell yeah.
my runner is now back to break even. So
Live stream is working. Yeah, no, I saw you took 70% off the table already. I mean, that's how you trade. I mean, you're not looking to capitalize on the whole move. You made 70% on, a quick little swing trade before you swung it. That's how you trade. Make your money, ride risk free.
scaled that at the 50% level. So I took half my position off. Then at the 75% up, I took off 2 more contracts, and now I'm running 3. We'll see what happens. I think I've got it down to break even. So it runs from here, great. If it doesn't, I still make good money. But not getting
Yeah.
greedy.
Hey, buddy, what you doing?
What's up, man?
I can't. Another day,
Another day, another dollar.
It's raining, so I get to stay home.
Aw.
No, I'm not up in a tree.
The nuh-uh.
I'd much rather be home in front of the computer.
Oh, for sure. I mean, I can sit here for an hour. I can make, a few $100. Yeah, man. Why would you want to do
Yeah.
anything else?
Safer too.
Yeah. Yes, it is. We gotta talk later, Josh, but after this weekend, I'm 90% sure I'm done Ubering.
Oh, yeah?
Yeah.
Well, chat, man.
This weekend definitely filled my how do I put this? My non-negotiables. I have filled up that on Uber. I'm no longer tolerating people. Can't stand them. This weekend was hell.
So, no more Uber. I'm sure you have an option.
cutting
Yeah, well,
trees
chat,
down.
man. Are you cutting the trees?
For this week, yeah. The only
Okay.
reason I'm home right now is because it's raining. But at least for this week and the next week, I told them I'd do that. I
Nice,
told them
man.
my commitment's here first if we do something. But
Oh yeah,
I
we're
told
gonna
them I'd
do
give them
we're
at
gonna
least
do
a
something.
notice.
We'll chat. Everybody wants you, man. They love you. They want more of you.
Well, I would much rather be here than up in a tree with a chainsaw, like
Of
straight up.
course.
So
Yeah, and it's less dangerous and it's more fun.
Yeah,
let's
this
take let's take a quick vote. Who wants Stir to come in and start, coaching a little bit more for you guys?
I'm in.
crickets.
Crickets. Yeah, don't make Stir feel bad, but also
No,
don't
either
boost
way,
his
I
ego too
appreciate y'all.
much.
Y'all ain't gonna bruise my ego.
Except that one day when I'm like, yeah, the best trader we have. You're like, oh, my ego just swelled up pretty big.
I think I lost like $300 that day and shut
Aw,
it down. I
shoot.
was like,
I'm
my head's
sorry.
big. I need to leave.
F you, Josh.
Honestly, like I was like, you know what? I'm feeling cocky. I need to shut it down. I took like one trade that I thought was good, and then after I got stopped out, I looked at it. I was like, there was no reason to take that trade. I need to shut this down. Just leave. Josh got in my head. Came back the next day, made it back, and then some. But I was like, yeah,
Yeah.
definitely. That definitely swelled my ego up. Not gonna lie.
Hey Josh, can you take a look at QQQ really quick?
And no, absolutely, yeah. What are you seeing?
So right now they have been constantly in the zone of 476 and 477.
So let me ask you this first before we keep going on. Are you saying that you have
Yeah.
a zone between 476 and 477?
Yes.
Okay. I'm curious to see where you found your zone between 476 and 477. I'm going to go ahead and mark that zone up.
Struggle I've been having all this time.
What was that?
That's the struggle I've been having.
No, and it's like this. It's having that question. Hey, I have this zone. We're sitting in it intraday. It's like, okay, let's stop there. Let's make sure your zone's dialed in, right? And be like, oh, okay, awesome. Moment of clarity. Then we'll go back to the intraday time frame and continue with the question you have. But step one, it's like you have a zone between 476 and 477. So I'm going to go ahead and mark that up on my daily chart. And I'm trying to see what you were seeing in the moment. And I know where you started your zone. Looks like you started your zone off that lower shadow from June 14th, because that's right at 476. Would that be correct?
Yes.
Okay. And then I don't know why we stopped the zone at 477. I don't see any touch points at 477. So what I would have to do is bring my zone down,
Yeah. Okay.
right, like this, where I actually have a touch point. And now I would have that touch point from the high of day from June 12th, right? But I would also have that candle open right here from June 14th. So I can mark up June 14th low of day up to that June 14th open, that candle right here. And I also get this other touch point from June 12th. So now I can start to say, you know what? That could be a good zone for today, right? That could be a nice zone to look at. And that would be between 476, where you started yours at. I would stop mine at 476.52, right up against that high a day. That would be the zone. Okay. If I were to have the zone, that would be the zone that I would be looking at for today.
Okay.
Does that make sense? Why we want to drag that zone down about 50 cents from where you had it?
Yes.
Perfect. As long as it makes sense. That's the right step in the right direction. Perfect. So now that we've readjusted that zone, let's go back into our lower time frame. Okay. And let's pick up where we left off with the question as far as what the Qs are doing inside of that newly defined zone.
Okay. So the question that I wanted to get into was, so I know it's 5 to 477.70 around there, right? And then it got rejected.
Yep, we came up to high a day at 477.70, and then we definitely started the drop and we got rejected. That's correct.
Yeah. So at 476.63,
okay,
it started bouncing back up, but it got rejected again, and then buyers start pushing again. But it got rejected again, correct?
What was that last thing? It cut out a little bit. What was the last thing you said?
So it got rejected. It got accepted, then rejected again at 476.84. Is that correct? Am I understanding it right?
Yep. So what we saw is it ran up to high a
Yeah.
day. High a day was at 477.70. We pulled back and we found more support right around 476.67. So you're right. You're reading that correctly. We came down to that level. We stopped falling. We bounced. And then we see buyers starting to step back in. And that's why we're starting to see that slight move to the upside.
I just want to make sure that I'm understanding the graph correctly.
Absolutely. 100%.
Okay.
So you definitely had a really good zone. We were off a little bit on the top end. You had it at 477, but we both agree that it makes sense to have it at 476.50, and that made sense. That's step one. Now you're reading basically the market is what you're doing. You're like, okay, now I'm just trying to read this market correctly, right? We came up, we hit a high a day. We obviously see more sellers than buyers. That's why we saw this drop, this pullback. And we came down right around this 476.67 level. We stopped falling. Buyers started to step back in. And then boom, we saw buyers, push it back to the upside. Now, if we were to see this type of movement, right, off of our daily zones, this type of movement would be tradable. So for example, if we would have came all the way up into this zone before pulling back, we could have taken a short position for the drop on off. So basically what you saw right here, the push on up, the rejection, the drop, we could have looked to short this to the downside if that took place up at our zone that we have identified for today.
Okay.
Same thing with this pullback, right? If this pullback would have came all the way back down to 476.50, then had that type of price action, this move to the upside would have been tradable if it was at our zone. So you're definitely reading the chart correctly, which is amazing. Now, if we see this type of movement off of our zones that we're identifying, that's what would make these moves tradable.
Okay.
Also setting up, just this seems like a perfect example, a potential fourth touch, lower high crack of the uptrend. But I got to say, Catherine, and to the other newer members in the group, the fact that y'all are able to identify these zones to such specificity, how to specific levels like that, it took me forever to dial that in. And like 6 months of, hey Josh, why is this here? Why, hey Corey, why is this there? Like y'all should be really proud of yourselves. I just got to say that, like the fact that you can even get those zones dialed in within 50 cents.
Yeah,
Like,
and I
that
think
took me
that's a
forever.
huge,
I feel
first step.
lost some majority of the time, but I'm trying to catch up.
Yeah, and like we talked about, I think last week, it's like the zones is probably one of the most challenging and most time-consuming things that you're going to learn, right? To really dial that in, to become confident and really convicted in the zones that you identify, right? From there, things actually get a lot easier because once you have your zones identified, it's easy. You just wait for the market to get to one of those zones to start. If the market never comes to one of those zones, there's never going to be a trade. But if the stock and the market gets to one of those zones, now you know there's probably going to be some kind of opportunity that you could trade. Then we just continue the process, continue those steps until we get to the point of we're actually taking these trades. So the biggest step for you to take is dialing in these zones. And like I said last week, it's probably one of the most challenging and one of the most time-consuming things that you're going to do. But once you perfect this, everything else is so much easier.
Chris gave us a really good quote that I'd never heard before, actually, on the mindset call yesterday. He said, give me 6 hours to sharpen my axe and 2 hours to chop down the tree, or something along those lines. But basically, give me more time to prep so I can execute in the moment because I already know my sword is sharp. So basically, pre-market is where we identify all these zones, or even Sunday night is what I like to come in and do and set up all my potential trade plans and levels for the week. So I know when I come in the market, late morning, whatever, I can, kind of refine them a little bit, check on the daily, make sure that trade plan is still intact. But I know all of that work that I did on Sunday night makes it so I can just execute when it comes to my levels during the week. And it takes all of the stress out of trading.
I'd rather spend 90% of my time doing prep and 10% of my time executing. And that's how it should be. And that applies to anything in life. Think about giving a big speech. Are you going to prep for an hour to give a 10-hour-long speech? No, it's going to be the other way around. You're going to prep for 10 hours for that hour-long speech. Preparation, 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 and then execution is going to be flawless.
Well done, Catherine. Keep asking questions. Keep trying to get those zones dialed in. If you see a ticker that somebody posts in chat, try and chart it up yourself.
Yeah.
Compare the charts, etc. When Josh goes over it in the morning, you can see, oh, my zone is, close to his. I wonder why it's not. And then ask that, etc. It's really going to make all the difference and shorten the learning curve tremendously.
Absolutely. And these are the best types of questions to ask in these live sessions because we have real-time opportunity to use as examples as the market's moving in real time for the day. This is like the best way for you guys to learn at a very fast pace is when the market's live and when the market's moving. So yeah, like Stir said, just keep asking those questions and ask it several times if you have to until it clicks, until it makes sense. But your zones are very spot on. Continue to improve that. Continue to dial that in, right? And that's always something that you're going to continue to do. A year, 2, 3 years down the road, you're always going to continue to refine your approach, refine your methodology. So keep doing that. Never stop. But once we really get those zones dialed in, the next step is, okay, let's wait for the market to come to one of these zones. Has the Qs came to one of our zones yet? And I'm just looking at this region right here. Like, has the Qs, since this little region that I circled out, came to one of these zones? No. So is there any reason to take a trade? No. What do? We sit back and relax. We sit on our hands and we wait. But when the market comes to one of those zones, now we start to go into the next step. It's setup recognition. Okay, now I waited for the market to come to one of my key zones. Fantastic. The market's where I want it to be. Great. Next step. I have to be able to recognize an opportunity, recognize a setup, recognize a strategy. There has to be something presenting itself at that zone, right, for me to want to take a trade. And so that's going to be the next step. So what we can do here today is wait for the Qs to get to one of these zones, and then we'll analyze what the Qs are doing to see if there is a setup that we can recognize. And that's the next step. Then from there, right, we'll go through the rest of that process if and when an opportunity presents itself, but that's where I would put your head next. Mark up your zones, wait for the market to come to one of these zones, and then just start watching what the stock does at these zones. Just watch it. How does price move? How does price develop? How does price react? And then try to see if you can start to recognize certain setups that take place off these zones. Let's get to that point. And when you're like, yep, I'm recognizing a lot of these setups take place off these zones, I'm feeling a lot more confident in my ability when it comes to reading the chart, right? Then from there, we start getting into the next steps in the process of, let's start taking these trades.
Okay, thank you.
Yeah, no, absolutely. You know, one step at a time, one day at a time, but you are making a lot of progress in just the past, week or two. Like Stir said, it took him a long time to do this. It took me over 3 years to be able to dial this in. You've done it in 3 days, I feel like. So
There was a good 6 months every single day. I was like, hey, Corey, how come this is 25 cents off of your level? What's going on? Like every single day, every single chart for a good solid 6 months.
And the more and more you did that, the more and more you came confident and convicted in your ability to identify those levels yourself.
Oh, exactly. 100%. And now I'm looking at the way I did TA now versus back then, and it's night and day difference, but my levels are more accurate, more spot on. And that has been a continuing trend. Like the more you put in, the more screen time, the more tickers you chart, whether or not you actually take a trade and you come back and compare, did it honor that level? Did it respect this level? Did it have a price action reaction at that level? Or did it just go right through? Did it go right through? Why? Oh, here was the better level. Like that type of comparison and analysis is where you're going to be like, okay, I get the confidence. Now I understand my levels are on point. Now I'm looking to take a trade at my levels because we can draw boxes and lines wherever we want on the chart. If they're not, at key areas, it definitely will throw your game off. Do like that. Did it touch there? Nope, didn't touch. So that's 3. So assumedly, if we start to curl off of a lower high from that previous point where Josh just switched the chart, that would have been the 4th touch uptrend.
Yep, that would have been 0.1 down here. There was your 0.2 right there. Came down and validated your 0.3. So this is an opportunity that you could have played it long if you wanted to off of 0.3. Then we start to come back down into that trend line for point number 4, but it was coming off of a lower high. So if this trend line would have cracked on 0.4 off this lower high, there would have been a very, very high probability chance that we started to see a little bit more downside. But what did we do? We came down to 0.4 and we held it and we pushed off of it. We never cracked it. There was never a reason to take that short through the crack of that trend line. So we came down and hit a 0.4. We bounced. Now we came down and hit a 0.5. We bounced again, right? Typically 0.4 and 0.5 getting long off a trend line, 50-50, right? Probabilities are really low trying to get long on a 0.4 or 0.5. But if you come back down and hit a 0.6 and a 0.7, those probabilities start to go back up. The trend line starts to get more valid after that 4th and 5th point. 6, 7, 8, they're on, right? It does get a little bit more valid and can be respected a lot more.
And that would be the 20% of the time that 4th touch lower high doesn't work out. You would
Right.
cut your trade right above that 4th touch swing pivot right there. That would have been dead right there. It's going to be one of those days where it just kind of chops and grinds, and then over lunch, it actually hits hedge pressure in that golden pocket. Is there a lesson in the Trader IQ that does a deep dive into zone identification and creation?
Yes, there is. Absolutely. And then you can use the search bar functionality as well on the top of the platform. You can just search for support resistance.
Trucker Ed, are you listening?
Yes, sir.
In response to your DM and trading futures with us overnight, I just wanted to comment again. It's not that you're not invited. It's just it's so slow at that time. Like
Oh, I
trying
saw
to
it.
okay, just trying to understand futures at that time of night and trying to really build a proper foundation. It's just not the right time, in my opinion. I
Yeah, no,
understand
I
you have
saw
more
the.
time overnight, but what Josh recommended to you yesterday about taking on a little bit more risk and having, more potential swing trade entries versus scalping, setting alerts for those types of levels and stuff, I really think that's going to behoove and benefit you a lot more than trying to learn futures overnight for now. Once you have that dialed in, I think you'll be able to make that transition just fine.
Oh no, yeah, I saw the volume movement at night. I was like, this is crucial. This is boring.
It's very boring. Like Corey says, it's you instead of giving one contract 4 or 5 points, you give 4 contracts 1 point, and then very very difficult to mentally manage that if you are doing that style of trading.
Oh no, yeah, I saw it. I saw the risk there was, because yeah, well, you see the candle, but then you see how many the volume that was in that one candle. You're like, wow. Nah,
Crickets,
thank you.
ghost town, and crickets. But yeah, I didn't want you to think I'm ignoring you. All of
No,
this
no,
stuff,
no, not at all.
yeah, nothing gets sent to my phone anymore. I've got Facebook shut off, Instagram shut off, Snap, like literally all forms of social media no longer notify me, so I have to be in front of my computer to check it. So I'm not ignoring anybody. I do apologize for the
No, not at all.
delays.
As for Catherine, I have a question for her. Sounds like you're understanding the TAs of how to find support and resistance, and that took within 3 days. And I know you're still fairly new. For all of us new traders, how much time did you put in to be able to understand it? I mean, because I know
You're cutting
as
out
new
pretty
traders,
bad, man. Just want to let you know.
Uh-huh.
I don't know if it's bad service,
I-
but it's cutting out pretty bad.
I know as new traders,
Uh-huh.
we're trying to cram as much information as we can at one time. And I mean, for you to be able to grasp this within 3 days, wow. I mean, that's awesome. So just to help out all the new traders, I mean, what was it the key point that to your success as being able to find that? I mean,
Well, before starting actually me identifying the zones, like I start watching a lot of the videos, and then meeting with Josh, and he assigned me some videos, and just watching them and taking a lot of notes. Like I'm a person that I write a lot of notes just so it keep me reminding me. I know I might have watched some other ones that were not on the list. But I'm one of the persons that when I want something, I just start looking at videos and just going over and reading. And I don't know if that's part of being a teacher. Like you have to be constantly like focusing and trying to observe as much as you can, and just paying attention to the details. But just watching a lot of the videos, just going back and just stop the video and take notes and just replay it again, going a little bit backward and just listen it again. And I've been going into the live streaming since I have access to it, even if at the beginning I was not on my own one, like me marking the zones, but I was just going in live with you guys and just listening to it. And then after that, I was just going and just keep watching videos as much as I could. I took my breaks, of course, but yeah, it's just taking a lot of
great.
notes.
Like I said, it sounds great. It just sounds like you weren't focusing on a lot of things at one time.
Thank you.
That's what we do, guys. I mean, everybody's at a different level of their trading. Everybody has different experience. Everybody has different goals and different amounts of time that they can commit to the program. So it really just comes down to, what do you need to focus on right now and why, just to make sure you guys are moving the needle 1% a day. So a lot of it is, yeah, do we have the resources, the education, the material for you guys to learn how to trade profitably? Of course. But without structure and a unique structure for you, you know, it takes people a long time, year, 2, 3 years to learn how to do this, even with all of the education and the resources out there. I think the biggest thing, it's just really getting to know you. Where's your experience at right now? What do you know? And then building on top of that and giving some, you know, daily action items, things that you can complete on a daily basis, and at least have structure and have something to work towards, right? And then just having someone to be there to hold you accountable and make sure you're on the right path on a daily basis.
And you mentioned experience. I don't have none. Like, this is the first time I like look at a graph. I had never done this before. Like, I'm like literally brand new learning. You guys talk about a lot of the terms, and sometimes I'm like, huh? What is that? Because it's like literally I have never been on this before. Like, I'm brand new on it.
Catherine, the other thing is, if you hear a term that you're not familiar with, just ask. People are more than happy to answer it. I mean, I've been involved in this stuff for like 30 years. That's all I did in the first few years in the business, was ask questions all day long. I talked to portfolio managers. I talked to economists. I talked to anybody and everybody, because to me, hands-on is the best way to learn something. Reading a book, yeah, that's great. You can go through all that, but man, something about sitting there having a conversation and talking to somebody about it is huge. So whatever the terminology is, we can help clear it up, because that's going to really help to clear things up for you.
100%. Take notes, ask questions. Take notes, ask questions. If there's a term that we spit out there and you're like, well, I don't really have time to ask that question, it's not the right, write it down. Yeah, everybody should have a dedicated notepad where they just jot stuff down, right? Specifics, questions, topics. Hey, this term that you used yesterday, can you explain it? Just have a dedicated notepad where you're taking notes and just jotting stuff down. And then follow up on that. Ask those questions, get the help, and that's how you're going to move the needle so much quicker than I did, than Stir did, than Corey did, than anybody else has. That's why we have a lot of people that come in and they get to the point where they're, you know, hitting consistent trades in their real accounts in as little as, you know, a month or two, as new traders that don't know anything about stocks, which is unreal.
Phenomenal.
In my opinion. To have someone come in that knows nothing about day trading or the stock market and to be trading consistently and making profit in a real account within a month or two, it's insane to me, because it took me 3 years to do it.
Well, not only that, like she mentioned, she's a school teacher, and I mean, let's say I'm trying to learn division and she's trying to teach me division. But if I'm over here paying attention to multiplication, subtraction, adding, and I'm not focused on what she's teaching me, then I'm not gonna learn division as fast as everybody else. But if I was just to focus on that one thing, and I only speak for myself because I noticed that I was trying to grasp terminology, Fibonacci retracement, a lot of things at one moment, at one time, that I wasn't fully focused on, just trying to start off with the TAs. I was going on TAs just from what Josh would say, and I'll write them down and be like, awesome. But guess what? The days that Josh wasn't here, I'm like, I'm lost. Give me some TA, somebody. And that's the thing about knowing the TAs. And I think that's phenomenal that you learned that quick, because you focused on a very key part of the program, because we would just be like, okay, is this the place where I go in or not? I mean, once again, we're just gambling at that moment. So I'm glad that you were able to just focus on one thing.
You know, on that note, to elaborate a little bit, Trucker Ed, when I joined here, there was a whole bunch of videos and stuff in the library, and I literally took the first weekend, solid 72 hours, and watched them all. I overwhelmed the crap out of myself. I was focused on this and that, multiplication, division, subtraction, everything. And I was asking questions all over the board, as opposed to focused on just my next step, what Josh had told me, and trying to really dial that in. I overwhelmed myself right from the get and increased that learning curve. There's a lot to learn. I'm still learning a lot every single day. With
Me
everything
too.
I know now, I'm still fascinated by how much there is to still learn.
Oh yeah.
Take
You
it
never
slow,
stop learning
pace by
either,
pace.
man.
No, exactly. So just don't try to overwhelm yourself. Don't rush yourself. Just on your own pace, it will happen. Keep asking questions. And if you guys ever post a question in Market Chatter, it will get a response. Like if it's 3 o'clock in the morning, you can't sleep, and you want to ask a question, like somebody will respond to that. And when you scroll back, you will see an answer.
Yeah, I tell you what, this market's slow. I mean, there's nothing happening today, guys.
Very range bound day for sure.
Oh my goodness, this market is yeah, it's tough. Just watching
Big
paint
pool.
dry.
Good day to engage, ask questions.
Yeah, I mean, everybody's got a question. I know. I always have questions. I have business coaches and business mentors, and every day I got a question, and I reach out and I ask. I ask a lot of questions. Maybe I asked last week, but I didn't really comprehend it. I'll ask again. So I know everybody's got a question. You just have to be willing to ask it to get the help that you need. And today's a beautiful, wonderful day to ask all the questions you have, because it's only 10:50 and the market's not really giving us a whole lot.
Okay, I have one again.
What's up?
Uh, so if on the swing trades, well, usually the swing trades we're usually playing them off the gaps, right?
No, not necessarily. You know, if there's
Okay.
something that we see on the daily and we see a good daily setup and we see that we can move for a few days or a few weeks on the daily, you know, that could be a potential swing trade opportunity. Doesn't
Okay.
necessarily have to be solely off gaps, for example.
True. I forgot. I'm looking at the chart in my head. Okay, so if I was, let's say, I had my zone marked in again on a swing trade, would you count it again invalid once it goes below that the bottom end of your zone? Once it cracks it and closes at the end of the day, right there, would you cut it loose, or still?
If I was
keep
in
it
a trade off of a daily zone, but the trade didn't move in my direction that day and it actually fell below and started to look like it was going to close below that key daily zone, is that where you're at?
Yes, sir. Because I know you explained to
It
me
would depend
yesterday
on the
gap.
trade. It's per trade. You know, there's a lot of things that I would have to think of in order to make that decision. But, you know, if I got into a trade off a key daily zone and it started to roll on over and close below that zone, regardless of hitting my stop or not, I would probably close it for a small paper cut just in case it were to continue to fade through the next day and hit my main stop anyway. I would probably cut that trade and wait for it to revalidate itself. So a good example of that's Boeing. So Boeing, we were looking for that swing trade on, what was it? Was it last Monday or last Tuesday? I don't remember exactly what day it was, but it was the same thing. It's like we were looking for a swing trade on Boeing. I think it was last Monday or Tuesday, right? And so I took that swing trade. And what happened? It started to roll that day. It was actually starting to crack a lot of those key zones and levels that I had, right? Did Boeing eventually pop back up and would have been a profitable trade? Yes, it would have. But that day, it was really starting to invalidate itself. It was falling below that zone. It was cracking the trend line I had. It was falling below one of those fib levels, right? The whole reason I had conviction and confidence was we had multiple reasons to take that trade long. Then we started to invalidate those levels and start to close below it. I pulled the plug on Boeing. My stop loss was never hit. I was not even close to my stop loss on the trade. But that very moment, that day, towards the end of the day, I'm like, I don't really like what we're looking like. I don't like how we're rolling and starting to close below all of that support. I do not want to continue to hold this and watch it gap down and just flush, right? So I'm going to go ahead and close this trade. And if it sets back up, perfect. It sets back up. I could always get right back in. So it really depends. It's a trade by trade case. It just really depends on what was your plan? What do you see in the moment? And do you think it's the best decision to cut that trade, or is it still technically intact overall? Your stop loss hasn't been hit. Hey, maybe you do hold it into the next day and continue to manage that trade. But it really depends on, in the moment, what do you see and what do you think the best decision is?
And that goes for any trade, not just swing trading.
Right.
Like if you've identified a level and it's not respecting your level, or you no longer have confidence in the trade, you cut it and you wait for the next opportunity. If you're going to be swing trading, ideally you're using larger time frame support, resistance, and supply and demand zones to trade off of, which will be a lot stronger than the intraday ones. But if it's ever breaking through any one of your zones and you no longer have, that good confidence in the trade, cut the trade, look for the next opportunity.
Okay, and I guess my next question was on Fibonacci retracements.
Okay.
Yeah, retracements. If you look at the SPY on the daily, I think it was within the 7 candles that we have going on right now.
Okay.
If you were to mark off that low and the high, and of
So
course, yesterday it went below that 61.8.
you're talking about from the gap up, Ed?
Yes, sir.
Okay. The low to the high.
Yep. So, I mean, you have your 2 defined points, swing low, swing high. That's a proper fib retracement to utilize.
Okay. Would you count it invalid? Because I mean, I was looking into it and I said, okay, no, this has to keep going to the downside. Why did I say that? Because I saw it had already crossed that 61.8.
Mm-hmm.
And I said, no, if it was going to respect it, it should have hit that zone and then jump back up, because that's what I've been seeing over and over. If once it cracks that, it's invalid, right? I mean,
it depends. I mean, just based on the fib alone, right? If you were looking to get long at the 618 off that fib for whatever reason, and the fact that it closed below that level where you're looking to get long, and that was your reason to get long, I would say that would be invalid, just based on the fib alone. But we're never going to be taking trades just on a fib alone. There's going to be multiple reasons. So, like, if you were looking to get long off the 618 because it was also sitting at a key daily zone of support and you had other reasons as well, would this crack below the 618 pretty much invalidate the fib? At that point in time, yeah. Like, that fib would no longer give you confluence. You would probably be like, you know what? Now the fib is not really helping me on the trade. We cracked below the 61.8. I didn't want to see that take place. So now I could say I don't really want to utilize that fib, but I still maybe have 2 or 3 other reasons that still suggest there is maybe some upside. Maybe the fib doesn't give me a reason at this point in time, but I should still have at least 2 or 3 other reasons valid on the trade, and I have to assess those additional reasons as well. But here's the thing. It's like, just because we cracked below it yesterday and closed below it yesterday doesn't mean we're not going to gap up today and regain that 618 hypothetically and revalidate that fib. So I wouldn't cross it off the table just because we closed below it yesterday, because what if we do gap up today, pull back into that 618 and then respect it beautifully to the penny? Well, at that point in time, would we think that that 618 is being valid again? Yeah, I would say so. So it really depends.
Okay.
It's, case by case.
Yeah, that was my question. Because I've seen it sometimes where it breaks and then it does come back to it, and then I guess it's not a crack and retest. It's a
break and retest, but you wouldn't really be looking for that type of setup, like a break and just off a fib level.
Yeah,
personally,
that's what I was going to say. There's a few different ways to utilize the fibs and a few different plays that you can use while utilizing the fibs. If you're just looking for that 61.8 retracement for the continuation to go long and it didn't work out, that's 20% of the time it didn't work out and you would just cut that trade. If you're utilizing them as support and resistance levels and you want to see how price action gauges at those levels, you can do that. But as far as that golden pocket window, that methodology didn't work out for this particular trade.
And so one thing I want to add to that as well is don't run fibs and then build on top of a fib. You always start with identifying your key zones first and do all of that analysis. Then pull out the tools from the tool belt. What's a tool in the tool belt? Fib retracements, fib extensions, uptrends, downtrends, other indicators that you use, maybe the 200 SMA, the 20 EMA. Then start pulling out the tools from the tool belt once you've identified your key zones of support resistance or institutional supply demand, if you take that approach as well. Then once you have that done, then build the fibs on top of it, right, to identify those other reasons to potentially take a trade. But the last thing I want anybody doing is just running fibs galore and then trying to find a support level based on the fib, right? I want you
Doesn't
to do
work.
the fibs
Ask me
like
how I know.
West.
I tried that. It doesn't work.
Yeah, it's like, okay, here's my fib. And so, like, now I'm just going to create a zone off the 618 and Friday's low of day. Now we're trying to utilize the fib to justify and identify key zones. That doesn't work that way. Remove the fib altogether. Is that still a key zone? May not be. You need to find all of your key zones first, then build the fibs on top of it, just to give you an idea of where the stock could retrace to, right?
Yeah.
Entering off the fib is never going to be a standalone reason to take a trade, right?
And that's
so
so
if we're
important to
looking at the
learn.
trade being invalid solely based on the fib, we really can't do that because we're always going to have multiple reasons to take a trade. So if we have 4 reasons to take a trade, right, and now the fib's invalid, that doesn't mean the trade's invalid. We still have 3 valid things that suggest we have a long opportunity. We had 4, right? Now the fib's not valid, so now we have 3. Do we still have 3 separate reasons that suggest we have a trade in front of us? Yes. Does the fib validate the trade anymore? No. So the fib doesn't help us, but the trade overall is still invalid. It's still valid, still intact, for example.
If you guys take nothing else away from this trading session, understand that you need to identify your zones first, not the VWAP, not a retracement, not a fib, not a trend line, the zone first, and build your plan there, just like Josh said. And then you start adding the VWAP or a trend line or other confluences to really gauge the proper trade plan. But if you do not start with a properly identified zone, everything else you do is going to be invalid and give you false confluences, and you're just going to wind up pulling out your hair.
Absolutely.
And when you say identify your zone, that you mean the daily zone.
Of course. Yeah, do all
I
of
would start
your
with the
daily
daily
analysis. Daily, weekly, monthly, 1 hour, 4 hour, 5 minute. Like, do all of your analysis. Like key zones of support resistance, supply demand, multi-day uptrends, downtrends. Do all of your analysis. Then start coming in and building fibs on top of that if you notice there's a reason to run a fib. So I noticed there was a reason to run a fib extension yesterday off yesterday's swing high, yesterday's swing low. That wasn't the first thing I did, right? That was the last thing I did. I found all of my key zones first. Then I noticed we had this multi-day downtrend. Then I realized, hey, I could take a fib off yesterday's swing high to swing low. And would you look at that? Right? That fib retracement level just so happens to be at the same point as the trend line, just so happens to be at the same area as that key zone of resistance. Now the fib is giving me some confluence as well. But the last thing I want to do is draw the fib, then start trying to find support resistance levels that just so happen to line up at the fib. And I start justifying, okay, this is a key support level and it's in line with the fib. You've done it backwards. It's easier to justify and try to find zones versus just finding the zones first, then building on top of it. Because that's what I could have done here on the SPY. It's like, okay, run that fib extension. Now I'm like, well, I'm just going to go ahead and grab these 2 points right here, just because if I did grab those 2 points, it would be a 50% as well. Well, how valid, how significant is that zone? It's not really the most valid, significant zone. I only found that zone because I was using that 50% extension level as a reference point to find a zone. That's not the most valid zone. So that's why we find our key zones first on the higher time frame, then we build on top of it from there.
And then with that, this range bound choppy crap that we're dealing with, I'm already above daily goal. It's 11. My alarm just went off. I'm going to go eat some food, shut down, and get out of here. I'll stay disciplined. Stay blessed.
You
I'll
too,
catch y'all
man.
tomorrow.
Have a blessed day, dude. Yeah, I've literally no trades today. Never opened up my main broker. Completely flat, just managing that OLED swing trade. I'm currently down 220 on it. And I haven't taken a futures trade today. I am completely flat. Opportunity today has been subpar. So, questions, comments, concerns, let me know. Get those mics open or start typing up in chat. It's 11:04. This is when the floor is open, guys. All right? Let's get you guys engaged. Let's help you guys out with anything that we can help you guys out with. We'll go from there.
So then in the morning, I had my wife just randomly ask me, "Hey, how much money do you need?" I go, "What?" She said, "Do you need any money?" I said, "No, for what?" She said, "So you can really focus on trading only." I said, "No, I'm gonna keep working." She goes, "But if you
I'm
wanted
gonna make
to,
my
how
own
much
money,
money do you
babe.
need?"
I'm gonna fund my own account. Thank you, though. I don't want you holding anything over my head.
I go, "Well, Josh said 1,000, 2,000." She goes, "Okay, I'll give it to you so you can really." No, I said,
That's
"No."
funny.
Mm-mm.
Not yet. We're not ready for that, but here soon we will be ready for that for sure.
I told her, "Nope, give me a month or two and we'll think about it." Yeah, she really wants me to just stop doing driving.
Yeah.
I guess once she found out
That's good, man,
I
that you have
got
a
a low,
good support system. Not a lot of people that start doing this have a really good support system, and that's huge.
yeah, yeah, she found out tomorrow I'm gonna be picking up logs. That's gonna be my first time picking up those logs, and she goes, "What? This Final Destination?" I said, "Yeah,
It
pretty
sounds like
much."
it.
I said, "Everybody better stay out of my way."
Yeah, what a slow range bound day. I mean, what have we moved from a low of 543.20 up to like what a high day of, yeah, we're in a dollar range here on the SPY. That is no bueno. At least the Qs have a nice little $3 uptrend from low a day to where we're currently sitting, moved about 3 points. But even looking at the Qs in hindsight, it's like, where would you have possibly taken a trade? It's like, I only see one area that you could have taken a trade. And that's when Catherine was asking a couple of questions about, zones. And then Stir was talking about the trend line. Hindsight's 2020, but, in hindsight, there was really only one trade that presented itself today. It was the break through all of that resistance, looking to get long on the first pullback back down into support. And in this example, you did have 0.3 of the uptrend as your support level, and you could have ran a fib retracement from that swing low up to that swing high to gauge where could we see a pullback to, right? And we would have seen confluence at the 61.8 fib because that was right in line with that uptrend support. So, I mean, that would have been the only trade that I even see standing out to me in hindsight. And I could usually find 100 different types of trades, but that's the only one that really clearly stands out on the Qs. So yeah, it's just been a pretty slow, choppy day. Nothing really standing out to me on the SPY, and only that one little trade on the Qs that would have given you a couple bucks, but nothing impressive. And then everything else we had on watch today too. I mean, nothing really setting up. Nvidia, nothing there. Apple, nothing there. Just a slower day, guys.
It couldn't be because, I mean, I know you said we had news at 10, 12, and 2:30, which supposedly they're not too significant. Do you think that
no, they're not like super significant pieces of data. I mean, you got a couple Fed members speaking. You got a Fed member at 12 and another Fed member at like 2:10. But for that alone to take all of the volume out of the market, all the opportunity, that's not the case. Now, if it was like Jay Powell speaking, okay, yeah, traders and investors sitting on the sidelines waiting for Jay Powell to speak. But just another Fed member, that wouldn't necessarily pull all of the opportunity out of the market. It's just one of those days where we're just kind of digesting a lot of this big movement we've seen the last couple of days. I mean, we look at the SPY. The SPY has seen a nice pullback just over the past, 3 sessions. We've literally just gone from 550 within 3 days back down to like 542. Doesn't seem like a big drop, but that's a pretty big drop in just about a 3-day window. Even yesterday, from 547 all the way back down into the mid 542s, that was a pretty sizable drop just yesterday alone. So right now, it's kind of like the market's just digesting a lot of this downside that we've seen here recently. And now we're just in this slight period of, consolidation until we start to get a sense of direction, until we actually see where are we going next. But we have these days. Not every day is going to be a hot day where the market moves 2, 3, 4 points and we can capitalize on it. Some days we're just going to have really tight, range bound days. And we just have to be super patient those days and realize, cash is a position. We want to preserve the capital.
I'm just asking questions because I'm waiting for someone else to jump in and ask some questions. I noticed in the morning that you're able to pull out the news report. Is that through TradingView, or do you have a specific website or anything
TradingView.
where you?
Yep. So you have it inside the Market Chatter platform. So if you go over to Trading Tools, you'll actually see Economic Calendar, and you can look at the economic calendar there if you want. It's powered by TradingView, or you can just use it right in TradingView to look at the economic calendar for the day.
That's one thing I have never done, and I just go by what you're showing us in the morning.
You should
And
learn to
every
do
time
that.
I go on TradingView, I do go, and I think I click and it says news, but it shows me 3 or 4 options, and I'm like, I don't know, and I always forget to ask.
You got
And right
two
now that
different
I'm asking.
options. They display
Okay.
news, so you can look at like U.S. news. You can look at global news. Like they have a real-time news feed for like news articles and press releases, right? The economic calendar is something completely different. So if you're just wanting to look at the economic calendar to see like high important events for the trading day, that's when you would want to look at the economic calendar to be able to see those high important events for the day. But then you also have the data feed, which is just like your press releases as well.
Which one holds more power?
Both. I mean,
Economic-
if you're yeah, I mean, news is a catalyst. So I mean, if Tesla right now reported some really, really good news, or they released an article that was super positive, I mean, that could be a catalyst to drive buyers into Tesla, and you see a big run. I mean, so news is super crucial for sure. News is a catalyst that will move a stock. They're both super important on a daily basis, right? You're looking at the economic calendar. You may not be looking at a news screener on a daily basis. Like if you're trading penny stocks, you're always looking at a news screener because you want to, see if there's any news on that penny stock that's driving the action. There's got to be a catalyst, in my opinion, when trading small cap penny stocks, to avoid getting caught up in like what we call pump and dumps, where the stock's just getting pumped in pre-market. There's going to be absolutely no follow through when the market opens. But if there's a penny stock pumping in pre-market and it had a really killer press release, that's a catalyst. That could be a reason that we could see more follow through and upside when the market opens. So I'm always looking at a new screener when trading penny stocks, but I don't trade penny stocks anymore. So I'm not really actively looking at a news screener on a daily basis. Like I'm driven to look at the economic calendar, right? What are those high priority events taking place today that could really move the market, and we could see the market react to that? So I would say economic calendar takes priority for me because I'm trading options and futures on large caps, the SPY and the Qs. If I was trading penny stocks, I would be looking at a news screener consistently throughout the day.
Got it. And
Hey
I guess
Josh,
my
this
last-
is Don. Oh, sorry.
Go ahead,
Don, what's up,
go ahead.
brother? It's good to hear
Hey,
your
what's
voice,
up?
man.
Along the trucker's question, I was trying to look at the tools and I couldn't find the economic calendar. It says tools and then it says economic calendar, but it doesn't show what you said about 10 o'clock coming up. Could you show me on the Zoom?
Yeah, 100%. So if you're using the economic calendar through Market Chatter, just go over to tools, trading tools, go over to the economic calendar. And then if you scroll up, there's a lot of different events that you can see here. So these are all the events that took place this morning, right? Today's June 25th. So we can see all of those events that were taking place today at 8:30, at 9 o'clock, at 10 o'clock. And so these are going to be the events that already took place. And so here are the upcoming events for the rest of the day. And so this is going to show a lot of events, and some of these not being too important, right? So what you can do is you can click this little, looks like a little bar chart right here, and that's going to only show you the high important events that are up and coming. So you can filter out basically all the noise by just clicking high importance, and that's going to show you all of the high important events coming up. So when we do that, we can see June 27th, We have our GDP final revision at 8:30 on June 27th. That's a high important economic event. We got jobless claims Thursday morning at 8:30. And then that'll just show you the most important events. But if you want to look at all of them, you'll see them right here through the economic calendar. And the other thing too is you see this little graph right here where you have like, 3 bars, like this one's shaded in 1, this one is shaded in 2, and then you'll find some that are shaded in like 3, where all 3 of those bars are shaded blue. That just grades the importance of that event. So 1 bar, it's low importance. Nothing you really should be too focused on, right? This one has 2 shaded blue. That's of medium importance. I want to be mindful of those events. Anything shaded in 3, like 3 of those bars are shaded blue, those are super important high events that we absolutely have to be mindful of. Those are the types of events, those are the types of data releases that the market will most likely react to. Those are very important events. And so I'm looking at the ones that are shaded 2 or 3, those medium important events or those high important events.
Thanks. Yeah, that helped a lot. I had it on 3 bars, so I didn't see what you were looking at.
Gotcha. Yeah, so just unselect the 3 bars. That's going to show you everything. Yep.
Thanks.
Absolutely. And it's just something to get into a routine with. It's a part of my morning preparation process. So not only am I looking at 80 stocks on the daily and trying to find the top 2 to 3 stocks for the day, I'm always looking at the economic calendar as well, just to be mindful of what's going on today. Do we have anything of high importance? Is Jerome Powell speaking? Do we have CPI data, PPI data? Like, is there any type of data that can absolutely move the market? And if so, I'm just mindful of that. Because if we got key data dropping at 10 o'clock and I'm in a trade at 9:59, like, I need to do one of 2 things. Number 1, I need to put a hard stop in the system as a safety net. Or B, I need to just close that trade because I do not know what the market's going to do or how the market's going to react off that data. We don't know what the data is going to be or how the market's going to react. So I'm mindful, for example, hey, 10 o'clock, we've got key data. If I'm in a trade, I know that I need to make a decision to either close that trade or make sure that I have a hard stop in the system, just to, again, mitigate risk and preserve capital. So just build that into your morning process before you even start trading for the day. It's like, take a minute, review your economic calendar. If you notice you have some pretty key important events for the day, what I recommend doing is grabbing a vertical line on your chart and just going to that time where we have key data and just marking up these vertical lines at every time we have key data dropping, so you cannot forget that there is something important happening when we get to that blue line. So if I'm in a trade, I need to be making a decision before we hit that blue line, because I don't know how the market's going to react to that data.
Yeah, that's something I got to put in my morning routine. Like I said, I've been wanting to ask the question. I always forget. And I just go by what you're stating. And I'm like, okay, just write it down, write down the number and just keep an eye on that. But
Absolutely.
Once again, I mean, I want to put that into practice as well, not just mirror image what you're doing only.
Oh, for sure. You should put it in the practice. It's definitely one of those non-negotiables and one of those things that you should be doing on a daily basis. They have a trade coming up on the SPY. I mean, it's taken nearly 2 hours for the SPY to actually do something and get close to us. But SPY is coming up into that hedge pressure level, that key daily zone of resistance, as well as that trend line, right? So we came up pretty close. I mean, nearly to the penny, 2 weekly hedge pressure inside of that daily zone of resistance and that trend line. We're starting to see a pretty nice reaction. So if we can see one more little push on up, just one more little push, give me a nice little intraday lower high after seeing that proper rejection off all of that resistance, I definitely want to be looking to play the SPY short, expecting we get a little bit of downside here. So we already ran up into all of that resistance. We hit it. We saw an immediate rejection. That's awesome. If it just dumps from here, I'm not in the trade. I can't chase it. But if we are able to see a slight push on back up and continue to see that the SPY is getting rejected off all this resistance, this is that key area that I was considering getting short. And I definitely want to be looking to get short here on the SPY. So let's go ahead and build a quick plan. Let's assume our entry maybe at like 544.30. Stops need to be above that zone of resistance. So we would go about 30 cents of risk. Where would a realistic target be here on the SPY? Well, my first realistic target would probably have to be this uptrend, right? I would have to imagine that we'll probably come down to the trend line and see some kind of a bounce. So I would have to have my target, first target, off this slight uptrend. I know my entry is going to be inside of that zone as close to 544.50 as possible. I want to put stops right above that level, right? I want to put stops just right above all of that resistance. Because again, I'm not expecting it to break through all that resistance. I'm expecting us to stay below those 3 points of resistance. And so I have a 3-to-1 risk reward, just about risking about 20, maybe 25 cents of risk, looking to get about 64 cents of reward to the downside into that trend line. And that's my first PT, right? Second PT, back up against these lows right here. If we pull that down, we can gauge where our second PT would be, almost a 4-to-1 setup. And then another PT would be low a day. That's a 6-to-1 setup. And then one of your final profit targets for today would be that daily zone of support that's all the way down at 542.60 to 542.74. And so if we see this completely follow through and hit your main target today, just trading from zone to zone, that could potentially get you nearly an 8-to-1 setup on the SPY. So we see we have a 3-to-1 setup into our first target. We can scale out from there and potentially capitalize on a nice little 8-to-1 setup here on the SPY. So as I'm building that plan, it's giving you that opportunity to start to get short here on the SPY. So let's see what we got here. SPY, first target into the trend line. It's 11:21. I'm not going to be in this trade throughout lunch. Nothing I'm going to hold for a couple hours. I'm probably just going to do a quick scalp, look for that quick, 70-cent drop, 20 cents of risk, 0 DTEs, and just look for a quick little base hit profit on this move and close it and not have to sit here and manage this throughout the day, throughout lunch. Now we just need price action to validate the trade. Right. And so you guys that are on top of this, you're dialed in, you see the trade. Don't let my explanation take you away from executing this trade if it sets up and it validates. But I want to take this as an opportunity to explain what we've just done for the newer traders here, right? To just help you bridge the gap from, okay, here's where I'm at, to the full process, all the steps in order to take trades. So step one, right? We found that key zone of resistance, right? That was step one. Step two, what did we do? We waited for the market to come to us. Okay, did the market come to us? It did. Okay. Step three, what else do you see? Do you have anything that stands out, right? I know we have this key zone of resistance and the market came to us, but is there anything else that we notice at this point in time? Do we have any confluences on the trade whatsoever? We do. What are our confluences? Well, we have that multi-day downtrend that's sitting right at that key daily zone of resistance. We have two reasons to get short: key daily zone of resistance, right? And multi-day downtrend resistance. That's two reasons to get short. Do I see anything else? I do. What else do I have? Weekly hedge pressure at 544.50. Is weekly hedge pressure a key level of intraday support resistance? It is. Is that in line with that daily zone and that multi-day downtrend? It is. How many reasons do I now have to take a short trade if we come up into this zone? I already have 3 reasons to take this trade short because we're coming up into all of this key resistance. I would expect to see there be more sellers than buyers. And when we see there's more sellers than buyers, the stock's price can fall. Exactly what we're seeing taking place right now. So step 3, identify multiple reasons to take a trade. Okay. Step 4. Right? Is there a setup that's recognizable? Is there a head and shoulders setup? Is there a snapback, higher low push? Is there a setup to recognize? Yes or no? If there is a setup, that's another reason to take the trade. If we would see a snapback, if we would have seen a crackback, lower high drop, right? We still have those 3 separate reasons to take the trade. We still have 3 confluences to get short, but then we actually see a setup that we can recognize that already tells us this is a high probability setup, right? That setup alone, I know, works 80% of the time, especially when it takes place off a lot of key resistance. So I'm looking to see if there's any kind of setup that I could recognize. If so, that's going to make me more confident, more convicted to get into that trade. But if there's not a setup to recognize, that doesn't mean I can't take the trade. I just have to be a little bit more patient to take the trade if there's no clear-cut defined setup or strategy presenting itself, right? And so what's going to be the make or break for me to take a trade? If I don't see the setup and I can't recognize, right, a strategy, for example, what do I need to do off all of this resistance? I need to let price action be what validates the trade, right? So come up into all this resistance where I have 3 confluences, and then price action, how price reacts and moves off all of that resistance, is going to be the icing on the cake for me, right? That's going to be what validates me to take this trade. Okay, so did price action validate the trade? It did. It did exactly what we wanted to see it do. Right? It ran up into all that resistance. It got rejected. What were we looking for? Right? We were looking for a lower high formation to get short off of, expecting the next leg down. Did we see good price development? Did we see that lower high, and did we start to see it rolling on over off all of this resistance? We did. So price development here, giving us that lower high, and price action as we're forming that lower high was the icing on the cake. That would have alone validated that trade, and you would have had 3 reasons to take the trade. The more reasons you have, the higher the probability that the trade's going to work in your favor. All right, so I've gotten through a lot of the steps. Key zone. Let the market come to me. Identified my confluences, right? Look to see if there was any kind of recognizable setup, right? Waiting for price development and price action to validate a trade, and it did. What comes next? Build a trade plan. We did that, right? Here's my plan. Here's my ideal entry. Here's where I would stop out. And the reason I would stop out here is because at that point in time, this trade would become invalid, and I have a realistic target. What's my risk reward? A 3-to-1, right? Is that a good plan? It is. Great. Now what I need to do, I need to go ahead and assess my position. So I need to do that math. Say, how many contracts can I take to not exceed a certain amount of loss? Right now I have to just go through that calculation to calculate what strike do I go with, what delta do I go with, how many contracts do I get to not exceed a certain dollar amount loss. That's all based on your account. So you just simply build your plan. Once your plan's built, you just react. That's the last step, is just react to the opportunity if the opportunity is presenting itself. Did this opportunity present itself? It did. Did you have multiple reasons to take the trade? You did. Did you wait for the market to come to one of your key zones first? You did. Did you build a plan? You did, right? You followed all the steps, one by one by one by one, and you recognized a high probability opportunity to get shorts. And so you would have simply just reacted to that opportunity. From there, just manage your trade. Is the trade still intact? It is. Is there any reason to cut the trade or move your stop to break even? There is not. The trade is still valid. The trade is still intact, and it is coming down into your target. So you're just going to continue to manage that trade until your profit targets are hit, and you're just simply going to scale out and lock in profit. Very simple process. Find your key zone, let the market come to you, identify all of the reasons that you can identify, establish your confluences, see if you can recognize a setup, right? Build your trade plan, right? Wait for price development and price action to validate and confirm your trade. And then from there, just react. So as I was explaining that, it set up beautifully. It gave us that lower high, right? Good price development, exactly what we wanted to see take place. And price action here also validated the trade as well. We came up into that zone, we got rejected. Opened, got rejected. Third candle, we tried to push again, got rejected. And at this point in time, we can clearly see this is the start of that lower high, right? Price development, lower high. Price action, having a hard time making a move on up. We keep getting rejected. So this would have made me very, very confident to take this trade short inside of the zone of resistance up against all of this other resistance that we identified as well. And I have a great 3-to-1 risk reward plan, and I can execute upon that. And then just like that, we saw a nice, was that about a 50, 60 cent drop? And then Stir took it. So he goes, thanks for the call out. Took the same trade, and he made $800. So
300. I had 500 earlier.
All right, 300.
Yeah, just to set expectations. And I
In
think I could
1,
have.
2, 3, 4, 5, in 5 minutes, you made $300 on a high probability setup, and you waited patiently for the opportunity to present itself. And you just simply executed. That's it.
I left the office actually, and I was walking the dog, and I just came back in, and I saw what was it? Jonathan said spy near hedge, and I was listening in, and I heard you building the plan, and I ran over to my computer, saw it was exactly where I wanted it to be. Price action supporting. It was like, let me take a small stab, stop over high a day, and hedge. And I mean, quick, what, 3, 4, 5 minutes, like you said?
Yeah, to make $300. And it wasn't
Really gold.
stressful. It wasn't challenging. You were patient, laid back, not even in your office. You come back, you see an opportunity setting up, you build your plan, you execute it. That's it. You're confident, you're convicted, you got your risk set, you let the trade do its thing. It's that simple, right? Literally, trading is that simple. It doesn't have to be hard, doesn't have to be stressful. You don't have to pull your hair out. It is that simple. Now, getting to the point of taking these trades confidently, that's what's challenging. But we break it down into very, very simple, easy to understand, and easy to master steps. One step at a time. Key zones, letting the market come to you, identifying your confluences, recognizing certain setups that carry high probabilities, right? Letting price development and price action validate your trade, building professional trade plans, and then just executing. That's it. And then just manage your trade. And rinse and repeat that process on a daily basis. And what you're going to find out is you're taking fewer trades. The trades you take are much better quality. So you're not really focused on the quantity of trades. You're focused on quality trades, A+ setups, one and dones. And you'll start to notice most of your trades are going to be winners. And your losers will be very, very small losers. So you start to see the growth that you want to see. You'll start to prove to yourself you have what it takes to trade. You can do it consistently. You're profitable. You have more winners than losers. You manage your risk well in your losers. You capitalize on your winners. That's a scalable trading system. So then start to scale that system to $2,000 a day, whatever your goal is. Once you prove to yourself you have a winning bulletproof system that's scalable, we simply just scale that system until you hit your goals. And nothing else matters. Nothing else matters in the beginning. Like, there's a lot of other stuff to learn for sure. But like, nothing else matters right now. Like, everything that we just talked about, that's all that matters in the beginning to get to the point of profitability. Once you're to the point of profitability, let's scale your system. Then we can start to discuss other things. We can talk about selling options for income. But right now, do we need to be discussing selling options for income if you're still getting to the point of identifying your system to scale it? No. So why are we going to talk about that? It makes no sense. So there's a lot of things that you're going to want to learn and know at some point. But right now, what we just discussed, those are the only things you need to master right now to be a really good trader, to make money consistently. Then we'll build on top of that.
I'm still on the adding, subtracting, multiplying. Now you're adding algebra, geometry. No, thank you. I guess that's why my wife, I told her, hey, I would like you to learn this, because she has like maybe 5 days off. She only goes to work 3 days a week, and that's it. Makes good money with those 3 days. And she's like, should I start another business? And I'm like, man, you don't want to work hard. Trust me. Like, I've grown different businesses, and she just takes a lot of your time. I said, how about on those days, instead of playing video games, learn the stock? She goes, I suck at math. I'm like, there's no math. I'm like, you like video games?
There's math.
Like a
what are you
video
talking
game.
about? There's math. Easy
Hey,
math.
if she knows how to put the settings on a machine with algebra and on how to breathe, I don't think this is math for her.
Hey, listen, like, I barely graduated high school, dropped out of college within the first few days. Was never good at math, honestly.
Really?
Like, math was my worst subject. And I look at myself and I'm like, man, do I really have what it takes to do this? Like, I'm not educated. Like, I'm not smart. I don't have a degree. Like, I suck at math. And I literally, for about 6 months, I talked myself out of even starting this because I didn't think I was smart enough to do it. Listen, dude, if I can do this, anybody can do this. It's really simple at the end of the day. I mean, people make it to be like, oh, it's super complex. I mean, yeah, it's complex. Is it hard? Yeah, it's hard. But once you understand it, is it simple? Is it easy? Oh, absolutely. And again, if I can do this of all people based on my come up and kind of what I experienced as a kid in my childhood and all the conditioning that I got and all the limiting beliefs that I had and just the poor education that I received, like I had everything working against me. Like, but I said, you know what? If someone else can do it, what's stopping me from doing it? And so again, guys, if I can do this of all people, you guys can do it as well.
You know, I still do math on my fingers. Like I really struggle with math. I barely graduated high school, just like Josh. I do not have any type of support with the family home system and stuff. It all comes down to the discipline and what you're willing to sacrifice. Yeah, I promise you it's worth it. But don't worry about the math. The rest, it's going to come down to, can you hold yourself accountable to what you said you were going to do?
Yep.
You're going to learn the rest.
It's so worth it, man. Because I mean, it's like, what other job can you get without going to college for 4 or 6 years to make hundreds of thousands of dollars per year working 20 hours a week? I don't know of a job, even if you have a college degree, where you can work 10 to 20 hours a week and make several 6 figures per year. Tell me a job. I don't know of one.
None.
None.
Well,
Right?
it
You
works
want to
for
be a doctor, you go into school for 4 to 6 years, and then residency and this and this and that. And like by the time you even start making money, you're 8-10 years in. Right? Just to be able to start breaking 6 figures and start paying back your $250,000 student loan debt that you're going to pay $250,000 of interest on. It's like, it's insane. It's mind boggling to me. Want to be a lawyer. All right, cool. Right? Go to school for 4 years, come out, open your own firm, be a lawyer, make $250,000 a year. But it's like, you got to go to school for 4 years and you're going to pay over 6 figures in student loan debt to do that. And you're going to work 40, 50 hours a week, 60 hours a week, 70 hours a week. You ever seen Suits? Those guys never sleep. They're working all the time. Right? I can work 10 to 20 hours a week and make a couple $100,000 a year from the comfort of my home, from anywhere in the world. And I value my time more than money. And I think that's the biggest thing for me that drove me into trading was I get to buy my time back. Like I'm happy to take a pay cut if I buy a lot of my time back. And I think that was the biggest thing for me is just the time that I get from this. I'm not going to work 40, 50, 60 hours a week. I'm going to work for 10 to 20 hours a week trading from anywhere in the world to make the salary that I want to make, that I'm in control of.
And
that's what motivated me to make this happen.
There's people that go to school to learn how to trade. There's people who get unpaid internships with not prop firms, hedge funds, who take years to learn how to trade. It's so much easier to just do it like this. To be perfectly honest, I mean, there's people that go to school for 20 years that don't have half the understanding that we do.
And I look at my wife. It's like she went to school for 4 years because she was kind of forced to go to school. Didn't know what she wanted to go to school for, but just wanted to go for the college experience, plus the pressure of you got to go. Went to school for 4 years. She owes $130,000. And by the time it's paid off, she'll pay about $300,000 between principal and interest. $300,000 for a degree that she's never going to be able to utilize. In a degree that's going to make her start entry level, even if she went into that field. It's like you could have just went entry level day one, right, without a college degree, and within that 4-year period, probably have moved up the chain quite a bit versus going to school for 4 years, getting a degree, and starting in the same position anyway.
Yeah.
And so now here she is. She's going to probably pay $250,000 to $300,000 in student loan debt for a degree that she's never going to use. And that's a lot of people. That's like over 50% of people who go to college never get a job that really pertains to their degree. They just go for the
That's
experience.
what I was going to say. I know many doctors that are in debt, and they're doctors.
And they're probably going to be in debt until they retire. Yeah, I mean, because there's just so much they take on to get that experience. But if you have the passion to be a doctor, to work in the medical field, if you have a passion, right, to want to be a lawyer, like, okay, follow your passion. You have to get a degree to go into those fields. Do it. But if you're like, I don't know why I want to go, I'm just going to go and maybe I get something out of it. Most employers nowadays don't even care if you have a college degree. They don't even look at that these days.
Jumping back to a conversation you were having about math, go back a long time ago when stocks traded in fractions, not decimals, 1/8, 1/16, a 32nd, a 64th, that kind of math.
Try and build game plans with that math. Yeah, count me out. Call me the blind trader. I have no plans. I can't do the math.
I would have 100% been mirror trading somebody's Discord if that was the case still.
Oh. Then you quickly learn, okay, an 1/8 is 12.5 cents, a 16th, and then you just learn from there and just figure, but it was a pain in the ass, that's for sure.
Yeah, Scott V hit it on the head. He's like, I always tell people that it's simple, but it's not easy. And that's exactly what trading is. It is simple, but it's not easy in the beginning. It's probably going to be the most difficult thing that you do. But I mean, look at it with anything. Like if you go to school to be a doctor, is that probably going to be one of the most difficult things you do? Yeah. Why? Because it's foreign to you. You don't understand it. Same thing with trading. It's foreign. You don't understand it. It's going to be very, very, very difficult. But once you get the education you need and apply yourself, it becomes very, very simple. It becomes very, very easy. It's second nature.
And,
yeah.
and just to real quick on this note, for those of you thinking, why don't I have it figured out yet? Or trying to push the envelope further than it actually is and wondering when it's going to click. People go to school for years. People learn for years to be successful at this. So don't be frustrated that you didn't figure it out in a month or 6 months of your first year. Yes, there's some who come in and it just clicks and they're rock stars. But for the rest of us, we need to reprogram how we think on a subconscious level. And that is not an easy thing to do. It's simple in concept, but not easy at all.
And ask questions, even if you have to ask it 3-4 times. I asked the question 3-4 times last time on how to the theta and delta and premium, and I had to ask it 4 questions, and it could be that one person that just explains it a little bit different. That hey, it makes sense. I mean, now it makes sense to me, but I asked that question 4 times to 4 different people. Right here in this course, in this team, and everybody gave me their answer. And I don't know, maybe I'm just driving and I'm not paying too much attention when I'm driving, but that one day it clicked, and I still thank all 4 of them because I'm sure they all gave me the same answer. I just finally clicked.
It's just repetition. It's like anything else. When you learn something, you don't just suddenly do it once and you master it. It takes time. I mean, heck, I was in business for 30 years, and here I am. Because you learn something new every day, and different angle, different approach. You talk to different people, and it's awesome. I mean, the whole idea is I always told my kids, learn one thing new every day. Just pick one thing and just learn something new, whatever it is.
I know I'm gonna need a new book to read because I finished David Goggins and also Trading in the Zone, and now when this is over, I don't hear nothing on my end, so I need to hear something while I'm driving.
I like Wherever You Go, There You Are. And I also like, and sorry to cuss, but it's the name of the book, The Subtle Art of Not Giving a Fuck. They're both very, very helpful as far as reprogramming the mental and how to focus on, it's the little things that matter and keep yourself from getting stressed out and overwhelmed and falling down again. As far as
Can you send that to me on a Slack since I'm driving right now?
Yeah, when I get back in,
okay,
I'll
yes, sir.
Slack.
Thank you.
Because I don't know the names of the authors off the top of my head, but I'll be able to grab the books and post pictures of that when I get inside.
Question about books. Would you recommend Candlestick Bible?
I heard Bible. What happened with the Bible?
I haven't read the Candlestick Bible, but I see a lot of traders that take screenshots out of that book and explain price action and so on. It's actually on my list of things to get and read through. Josh might have read it. I don't know if he's.
I'm really new to the stock market, and I think I'm not. My goal is to have a first call with Josh, maybe in 2 months. Then might even take longer for me to get to that point.
I mean, it might take quicker too. Here's probably one of the more crucial pieces of advice I can give newer traders and older traders. Do not put a time limit on how long you're giving yourself to be successful or to learn these things. Don't say, I'm going to know this by next week. I'm going to take a successful trade by Friday, or don't put time constraints on yourself like that. It adds so much unnecessary subconscious pressure.
It adds pressure, loose trades, not grasping, not letting the information sink in because you're stressed and anxiety is over the top because you're just focused on, once again, just money. I mean, I entered in October. Oh, no, November, right here. And I'm just barely understanding. That was a month and a half ago. I mean, since maybe mid-May, I started understanding, and I still haven't made money.
My first year, I guessed and checked with real money that I needed. Like that's much better than how I started. You know what I mean? Like that you're doing it the right way. You're building solid foundation of understanding. You're paper trading to gain experience. So when you do switch to a live account, it's more familiar. I didn't even know where the buy and sell button was. You know, I had to ask you into this group. Hey, by the way, how do I actually buy stock on POS? Because I only know how to buy options. Like, you know, don't be embarrassed by any means.
Respectfully, you
Ask
made
all
me
the
lose
questions you have.
2.7K. You lost 2.7K. I didn't make you lose anything. Did you make a decision to take a trade?
Josh, you got any
did.
books you
Did I
recommend?
force your hand? Sure didn't. So don't put the blame on anybody else. Take ownership.
He's gone.
No, I'm here.
Oh, I'll start drawing a chart.
No, I do have to cut out here. Get prepped for a slate of one-on-ones today. So a couple more minutes, and then I'm gonna head out, guys. So what's up, man? You had a question? Or
Did
something to
you
jam on?
Stick Bible?
What?
The group, I think it was Don. I don't recognize the voice off the top of my head, but somebody just asked if
Yeah,
you,
it's done. Yeah.
it was awesome. The Candlestick Bible is a book, and I know that I noticed other trade groups tend to screenshot pages out of it, but I've never personally read through it myself.
Of the Candlestick Bible?
The Candlestick Bible. It explains price action, how they operate, the transactional, you know, zero sum gain, etc.
Okay.
Basically breaks it down into very much more excruciating detail from novice to expert.
Okay. Were you just filling me in that, you know, I do know if there was a question behind it.
If you had read it, but it sounds like you don't
No, I
even know what it
haven't.
is. So
No.
it's on my list.
No, and then what I would do is like some of these books could be in the book club. So if you guys go to your dashboard page on Market Chatter, you see where it says Alpha Book Club. Just go ahead and click that, and that's going to bring you into this private folder where we have books around TA, day trading, options, wealth, and mindset. Tim took probably an entire weekend, downloaded all of these PDFs, and then uploaded them and then assigned them into this Google Drive. So, I mean, you can find pretty much anything you need here. I mean, the Trading Bible might be here. I mean, look at how many different PDF books there are just for TA. Right, then you go day trading. There's a lot of books for just day trading. Then mindset, options. I mean, you name it. So you're going to find a lot of stuff here.
Can you search real quick for the Candlestick Bible? Because that's what I'm going to.
I got the Day Trader's Bible. I don't know if that's it. The
I just keep
Bible
hearing
of
Bible.
Option Strategies, the Candlestick Trading Bible right here.
That's it.
Yeah. Like I said, any book you can think of around trading, options, strategies, even books around mindset and just wealth, you're going to find those in the book club for those of you that like reading books.
I'm going to go find the audio version of it, not even going to lie.
Yep. I like audiobooks more.
Hey, Josh, how do you get to that library again?
Yeah, so a lot of the links, I mean, pretty much every link that you would need is going to be here inside of marketchatter.io on your dashboard page. So it's the main page that loads when you log in. At the very top of your dashboard page, you have your quick links. So if you just want to load up the Slack channel for your check-ins and the DMs, you can load that up. Alpha Book Club link is right there as well. And then to launch the private Zoom sessions, you can just click that and launch it, and you have all of your quick links there at the top.
There is the group.
Yeah, I had asked the group, what other book would they recommend since I already finished David Goggins and Trading in the Zone. And now it's kind of quiet whenever no one's here and I'm just driving at night and it's just quiet. I'm like, man, I need to be listening to something instead of just having white noise in my headphones.
All right, well, I do need to wrap this up. get prepared for a day of one-on-ones. It's going to be a long day. It's going to be a fun day. But enjoy the rest of your day, guys. Trade smart, trade safe. If you guys took that trade on the SPY short, congrats. Was a really good trade. Other than that, that was the only thing that set up today. That was the only thing we analyzed, the only thing that we built a plan on, and the only thing that worked out. So if you took it, congrats. I'm flat on the day. I didn't take a single trade. No futures trade, no options trade, nothing. I'm flat on the day, and I just didn't see the opportunity to get involved. So keep up the amazing work. Trade smart and trade safe. Have a blessed day, everybody, and I'll catch you guys back here bright and early tomorrow morning at 7 a.m. Let's end it with a big ol' Alpha Day trading, and it's only going to be Alpha Day trading for another 2 weeks. So get ready for the change. It'll be weird, but let's end it with a big ol' Alpha Day trading. 3, 2, 1. Yeah! Woo-hoo-hoo! That's what I'm talking about. Ending the session with some fire, with some heat, with some energy, making guys feel really good. Now go attack the rest of your day, ladies and gentlemen. Stay blessed, take care, and again, I'll see you back here tomorrow, guys. Peace out.